It is a pleasure and an honor to have you all here today. I see a almost full auditorium, and this auditorium has a capacity of 240 people, which means that we're almost 200 people here today. It's amazing being there and preparing for these pre-conference meetings for IWC10. We were hoping that we will have some good attendance, but this is definitely exceeding our expectations. On behalf of GEF, on behalf of IWLearn, I would like to welcome you here today. This is the second day of the pre-conference workshops. We're going to have 2 workshops running in parallel, one on sustainable funding and financing that will stay in this room, and another one on communications that will go into Teatro Solis on level 1 for those that were here yesterday, or you just follow the signs and the instructions of our people. I cannot say enough of how important both these workshops are. We have the honor, for those that have not already noticed by the voice and the, I don't know what to say about you, Al, but we do have the honor to have with us Al Duda. Please. He will not be, for today, he will not be extending his remarks because he is our guest of honor for the 10th GEF International Waters Conference. So you'll get to see him tomorrow and talk to him, and you'll get to hear all about the story of GEF International Waters. So today we're focusing on needs and priorities that the GEF portfolio has already brought forward. One of them being financing, and the other one, of course, is this need of how we communicate our projects, how we communicate our work, and how we use this as a tool to engage with stakeholders, to make them understand what we're doing, and to eventually enable our work. Without further ado, a welcome remark from CAF that is very generously hosting us here today, Mr. Ignacio Lorenzo. He's a director at CAF. First of all, thank you very much for hosting us for these 2 days. Not only the venue, but all the facilities, all the services that you have been enjoying for 2 days have been a generous offer by CAF. Thank you so much. Over to you.
Thank you. Well, good morning, everyone. I'm Ignacio Lorenzo, Director for Biodiversity and Climate and CAF, and also head of the 3 climate funds for CAF. Please call me Nacho. So welcome to the second day at CAF, and also being the first Uruguayan on the podium. Also welcome to Uruguay, welcome to Montevideo. So good to have you here. I'd like to make 3 remarks. One regarding yesterday's work, and a couple regarding today's work. First, regarding yesterday, I believe it was great conversations. I joined a couple of huddles in the room yesterday with the experts, and I believe the conversation was actually very substantial and very engagement. So I believe that we are indeed making progress and learning together. I also was in the room upstairs at the seats, and I also saw great projects, great engagement as well. So really happy that we are indeed having a great work, and also looking forward for an excellent conference next week. Coming from yesterday, and I would like to recall Mary's conversation about us being a family, a place where we can support each other in terms of all the work we have to do. In particular, we took a look at all the administrative issues, rules and regulations, and the PIF and the peers, and the products and the budget. But I also like to see that in the sense of urgency in terms of the environmental and climate crisis, and this idea of being a family, not just for us to support each other on these administrative and procedimental issues, but also as a family of purpose in terms of the work that we are doing and the work that we are achieving is essential for the world that we live in, which is quite complex. Going into today's conversation, first on communication. I believe it's excellent that we're having a workshop on communication. My former boss, she was the mayor of Montevideo. She's a political, of course, person and also a communication savvy. She always said to us that if you don't communicate, things you actually do are just not there. So you have to communicate, and that, of course, has a political impact, has an institutional impact, but also in terms of public finance, is also transparency and accountability at all levels, at global, regional, local level. But most important, when you communicate environment and environment results, you are also working in another layer of communication, which is building hope for the community and for the world. So the way that we communicate has also to link with the desires and the needs of the community, and how the achievements that we achieve in terms of environment results and impacts and indicators are also translated to the lives of the community, so they can also be empowered to do more, a lot more, beyond what is actually financed in the project. And third, on the issue of finance, and this is somehow one of the elephants in the room, and it's great to have a workshop in this today. We, of course, are a financial institution, so we are really comfortable in that conversation, but we see that this is a conversation that is highly needed. Looking into the guidelines that we have for the ATD and the SAP, and I went to the whole principle this morning. I also been part of some ATDs and SAP in the region before. And if you take a look of all the principles that we have, adaptive management, ecosystems approach, sustainable development, poverty reduction, gender mainstream, climate variability and change, all of the issues that you daily work with, the collaboration, the stakeholder consultations and participation, the stepwise consensus, I really love that one, transparency, accountability, intersectoral, donor partnership, and government commitment. But I still see that there's no finance as a key principle to ensure the implementation afterwards. So I invite to have a very, very candid conversation, a very candid workshop, and in that regard, I'm really happy and welcome David to join us for this conversation. I believe it would be very useful for us to have a very, very strategic, candid conversation so we can foster the issue of finance in terms to ensuring implementation and impact on the ground. Lastly, and I just take one more minute, please, is to thank the IWLearn for their trust in CAF to be your partners in this pre-conference. Constantina and your team, thank you so much. And I also like to thank my team, of course, René and Cecilia. Cecilia, we will also tell you something very interesting about the Green Coalition of Banks in the Amazons is something that is happening as well, that also speaks to the way that we can engage these transboundary issues and also finance on the ground. And also our colleagues from Water in CAF France, who make the open remarks yesterday, Agustin and Fabi, and also all of our organization team, Rosana, Maria Victoria, Jenny, Luisa, and all the people from support, technical guys, translations, the people from the food and security. Thank you so much. We will not have final remarks from CAF, so I just wanted to take that minute to thank my team and all their work, which has been excellent. Thank you so much. Thank you, guys.
Thank you very much, Ignacio. I would like to call on stage Mr. Andrew Hume. He needs no further introduction, I think. Thank you, Andrew.
Good morning, everyone. Ignacio said everything I was going to say, so really there's not much more to say. I mean, you really, I think, said it all for us. So my name is Andrew Hume. I'm the coordinator of the International Waters Focal Area at the GEF Secretariat. We just got in last night, so if I say something that makes no sense, apologies in advance, but I will be very brief as well because we've got a long day ahead of us. Just want to first off say thank you to CAF, Ignacio, René, and colleagues. This is a beautiful building. It's so nice of you to host us here. It's, the gathering is really, really important part of the conference, and so thank you for that. It's really, generosity is really welcome. Just a warm welcome to Uruguay as well, so thank you. Also, Constantina and team from IWLearn. The facilitation, the logistics behind all of this to make this happen. This week is going to be a busy week, but thank you in advance for bringing us all here. So yeah, I heard yesterday was a lively discussion. I've already heard some really positive feedback from both sessions, project management and SIDS. As we heard from Ignacio, we're going to focus today on communication and sustainable funding and finance. So while it might not be immediately clear why these are all, what the common thread is that bring these all together, these are very important areas that the Jeff Secretariat and the Jeff Council is looking at. There are also areas highlighted by IW Learn from the IW Learn community, previous conferences, as areas that we should continue to discuss and focus on. They're core parts of the Jeff 8 strategy that span project design to implementation. And I honestly think there are also areas of further growth and opportunities within the Jeff focal areas, the Jeff International Waters focal area and our future projects. So really what's discussed over the weekend and this moving into the week offer really important insights into how we craft not just the current Jeff portfolio, but looking into the future. And with that, of course, is looking at the Jeff 9 replenishment. So these are important conversations to have. I think it's important to be honest, share what works, what doesn't work. We're well aware of the many things that could be improved within the Jeff process. We're no strangers to that. So we want to hear what's working and what's not across these different topics. The Jeff partnership and the IW focal area are only successful based on the time that we all invest into it. It's a partnership, it's a family. And so the more we put into it, I think the more we all get out of that. So having all of us here today is really a testament to that, to the commitment towards international waters. And it's why this workshop this weekend is so important. So just thank you all for being here today and being here this week. It's going to be an incredibly long but productive week, and looking forward to it. And looking forward to meeting many new faces I've not seen, and it's wonderful to see so many familiar faces already. So just welcome and thank you, and just excited to be here.
So before we break out into two groups, the communications workshop is taking place in Teatro Solis. This is one level up, but before we break there for your sessions, some housekeeping rules. Coffee break is served right outside as you saw it, and it's a common coffee break for both workshops. But before your next coffee, at 11 o'clock, we're going to take a family photo. So please make sure that you all gather at the reception so that we arrange according to the weather where we're going to have this family photo of these workshops. We're staying here for the financing workshop, so please, the communications workshop can move on to their venue. And here it starts. I would like to call on stage Dr. David Macaulay and Miss Jessica Thompson for... Are you listening? Okay, let's get this running. The workshop today is on sustainable funding and financing, and for those that went through the concept notes that we shared, you will see that this is the concise agenda. We're almost 20 minutes late, so we'll try to cut down, some of this time in order to make it, because the buses are leaving and this is a non-flexible deadline. The agenda starts today with a masterclass that is being delivered by Mr. David Macaulay. Is the former ADB Climate and Programs Head and World Wildlife Fund Senior Vice President, former for both, and now he's an advisor on sustainable finance and a policy expert. And his colleague, Ms. Jessica Thompson, who is an independent consultant specializing in sustainable financing and investment analysis. So I would like to call you on stage. I'm not going to say anything more. So let the masterclass begin.
Yes, I've got sort of a mini version here. Thank you. Hi, good morning, everyone. Thank you, Konstantina. So we're off to a good but a little bit slow start, and we'll try to keep to the time frame roughly. We may eat in slightly to the Multilateral Development Bank's panel, but we'll just all have to adjust. My colleague, Jessica Thompson, and I, were going to sort of tag team this as we go forward. And our goal for this third workshop, pre-conference workshop, is, as given in the original program, is to help you come to terms with and to explore some concepts and options regarding post-Jeff funding sustainability, if I can put it that way. Also to gain some insights into a range of concepts, including the idea of bankability, to review both traditional financial instruments that are being applied, as well as some new, emerging, and innovative ones, and then finally to develop some recommendations for future IW programming and approach. But before we do that, I thought just to get started, we don't have, for those of you who were in this room yesterday, you had the online survey to get your views. But I thought informally what we might do is just get a read of the room by, I'm going to read out 6 topics. And if for each, you could sort of raise your hand. You have 2 choices. One is it's something that you feel fairly familiar with versus one that maybe less familiar. So for each of these, if you could raise your hand, I'll ask you in each case, familiar, less familiar. The first one is payment for ecosystem services. My guess is many of you are familiar with it. So those that are familiar with payment for ecosystem services? Great. And those feeling less familiar? That one, okay, a few. That has been around for a while, but we'll touch on that. Another is the concept of bankability. Those that are familiar with what it means for a project to be bankable or a program, bankability, right? And those that are less familiar with what it means, so it's roughly split, half and half. Thanks. Then green bonds. So they're getting a little bit tougher as we go. Green bonds, those that are feeling fairly familiar with green bonds and how they work, and those that are less familiar. Okay, a little less familiarity there. Debt swaps. Lots of debt for nature swaps over the years, debt for climate swaps, so forth. We'll touch on that. So those that are familiar with debt swaps, feeling familiar. Those that are less familiar, okay, a little less familiarity there than I expected. Good. How about earmarked revenues? Earmarking revenues for specific purposes. Those that are familiar with that practice and those less familiar? Okay, the less familiar have it. And then finally, blended finance. Those that feel familiar with the concept of blended finance, oh, this is good. And those that less so. Okay, well, that's helpful. That's really helpful for us, I think. Yeah. All right, great. So now we'll move on. And we're going to start with, and I hope Andrew and the IW team won't take this as any sort of criticism. It's simply a statement of where things are right now, as Andrew said in his opening remarks. And we heard yesterday, those who were in the room, in terms of the philosophy, I think it was called, of international waters. The rationale is that you're protecting or even in some cases producing or expanding the availability of largely public goods. Public goods meaning those that benefit all, and if you, from an economic standpoint, it's also defined as if one person uses a public good like clean air, it doesn't detract from someone else having access to it. They are also very difficult to price. Often the market does not capture and put a price on public goods. The second is the scope. Obviously, you're all here for an IW conference, so you know you're covering both freshwater and coastal marine ecosystems. The indicators that you're using are focused on Jeff's mandate, which is global environmental benefits. That's a GEB. And it's also largely those non-market or non-priced ecosystem services. The process for Jeff IW, you're going to be talking about this a lot over the next week. The TDA SAP process, I'm assuming everybody is roughly familiar with how that works. And phases of funding. But if you read those documents, you don't see very much about finance in there. You don't see much about sustainable finance. You don't see much in terms of establishing an exit strategy. And we're going to be talking about that a bit. The sources of finance for Jeff IW projects are largely from the public sector, from GF grant, or from the partner organizations like the multilateral development banks, or in some cases from philanthropic sources. Time frame, say 4 to 6 years. I may have that a little off, but and there's also this indicators kind of linked to the SDGs, which of course has the 2030 targets. And finally, responsibility. It's largely very government oriented, rather than private sector or other types of partners. Although obviously there are universities who get involved with the TDA part especially, and so forth. I'm going to turn over to Jessica to give sort of an overview here of how we might think about moving from that kind of an orientation, which is very public sector oriented, to one that begins to rely more on accessing the market. Go ahead.
Good morning, everyone. So as David indicated, we're talking about moving from a pure grant phase and opening a project or program up to greater sources of revenue. So what this chart doesn't show, that line should be increasing up and to the right. So seeking additional sources of income that might be more private sector focused or market focused, like income revenues, in order to secure sources of income that are more perpetual, long-term, and independent. So in the beginning here, and there's a mindset shift embedded here from just focusing on grant-based programs to using grants in the beginning to prepare the market and all of the different actors in the market, using that technical assistance to prepare the market and the players to receive more private sector focused income. So that's right here. So in that model, part of the use of the grants and concessional funding can be preparing for these new activities, building capacity, as mentioned, preparing the market, preparing a program that's going to open up to other types of income, building consensus amongst all of the program parties, across jurisdictions, and education. So, and then we move into the next phase, which is blended finance. So now we're welcoming in private sector income and loans and guarantees and things like this, but there might still be a grant element involved. So maybe the interest rate is lower or there's a guarantee of some sort. And this allows investors to get more comfortable with the market, allows perhaps local banks to get more comfortable with the risk involved in a new sector or new type of business. And this would be paired with continuing TA and preparation. And then, so this middle phase lowers the risk because there's more experience, there's more comfort with, and there might be pilots in the middle phase. So then in the final phase, we can replicate that type of an investment or program. So what kinds of revenues might we see in the final phase? It might be commercially market-priced lending, carbon credits, PES, payment for ecosystem services, tourism revenue, fishing concessions, fees for irrigation. So utilizing the protected areas for different types of possible sustainable income, bonds revenue, and then bankable, we're building perhaps in some bankable projects that can get financed now without needing to seek grants. So that's the financial sustainability continuum. I'll turn it back over.
Yeah, so we're just starting with these two. Don't worry about having to capture all these concepts right now. This is just the overview. Another bit of overview I wanted to just begin with utilizes this model that you see here. This has been developed by World Wildlife Fund and other partners for protected areas networks at the country level. So basically, it starts off with influx of mostly philanthropic funding, but in some cases also public funding, say from Jeff. There is a project. You're going to see this slide twice, by the way. Not the whole slide, but that picture you'll see again. Yes.
Also, you will receive these. You'll receive this presentation later by email, so you don't have to write everything.
Yeah, like yesterday, you will be getting the presentation. Good point. But this has been used in that manner. It sort of breaks out of the pattern of having to rely on domestic and international grants, as Jessica was noting. It importantly begins with sort of establishing a goal. In this case, it's for bringing the entire protected areas network of parks and other protected areas up to an international standard, and then establishing sustainable financing for that system or network. And then you have to price that out, figure out what it's going to cost to get you to that point, and all of the other elements, and then you sort of work your way back. So the blue part is the decreasing of the external support. The bottom rectangle is the recognition of the existing domestic funding, and the green triangle to the right is the increase of a wide range of domestic, local funding sources to fill that financial gap and to reach that goal. Like I said, you'll see this one again. So here's the outline. So those are just two quick overviews of some of the concepts we'll be presenting. And here's basically the outline of what we have, about 45 minutes, I guess, now to try to get through this. So, and this, by the way, is just a first. Masterclass is a bit ambitious in terms of the title. It's an introduction, but as Andrew and Konstantina indicated at the outset, this is a topic of interest to the Jeff community, both IW Learn and Jeff Secretariat, Jeff Council. And so this hopefully will help plant some ideas amongst the wider community. And this is something that will be recurring, I believe, over the next little while. So you can see you start with sort of the policy and the sort of enabling conditions of institutions and policy incentives. And then you think in terms of the application of rather traditional financing instruments, such as the use of philanthropy or guarantees and so forth. And then we'll talk about some of the more emerging topics and innovative ones at the end. So beginning with policy and enabling conditions. This is something you're already dealing with as part of the TDA part of your analysis. But this is a lot of text up here, so I'm not going to try to go through all of it. But you can get the sense of the range of potential policy instruments at your disposal. And they're both carrots and sticks. So the sticks part of it is more the regulatory side. You're setting bounds on behavior. You're penalizing that behavior through government regulations, through fines that you may have to pay for polluting a river or for illegal fisheries and so forth. And then there's a question as to whether you can use those fees and other revenues that are generated. Then there are strategies like nature-based solutions that are increasingly being incorporated into nationally determined contribution plans, long-term plans on the climate side, or what's it called, NBSAP on the biodiversity side. And you're seeing this work in basically nature-based solutions are taking advantage of the ecosystem services that are provided by healthy ecosystems and trying to capture those benefits for greater social benefit, greater social welfare. Finally, we've introduced this term here, discounted financing. You'll find both of us, and maybe the multilateral banks speakers later and others, using the word concessional finance. Basically, it means any sort of use of financing that is priced less than what you would pay if you just went out on the market to obtain it. So we'll come back to that. And the difference, that discount, is the level of concessionality. Earmarking revenues, the IMF hates earmarking of revenues, and if somebody were here in the audience and hearing me speak, they'd probably not be very comfortable. But it is, the reason they don't like it is that it makes it harder to do national budgetary policy when you're siphoning off little bits of government revenues for specific purposes. On the other hand, it can be a very powerful tool if you're collecting park fee, entrance fees for a national park, for example, and it doesn't go straight to the treasury, but it feeds back into the management of that area. That's an example of earmarking. And then there are lots of examples of use of policy incentives, such as the impact of regulations on the illegal fisheries, or on offering tax credits to industries along a stretch of a river for investing in beyond their regulatory limits, giving them an incentive to invest in stronger pollution control or other practices. Blended finance, I was very pleased to see that we had a majority that felt reasonably comfortable with the topic, so I'll turn over to Jessica to give you a little bit more on that.
Okay, so just to go over this concept again, David actually did a very good short summary in a couple sentences. But just to put a visual on it, so we have a blended finance structure in the dark blue. To back up, maybe there's a project that's seeking financing, but it's perceived by banks and other funders as very risky. Maybe they haven't done nature concession before, or they haven't done any blue funding, and they haven't done ocean projects before. And in addition, it's an international country, so there's country risk. What can be done is mixing their funding with a grant element together. So the concessional portion, or the grant element, is the difference between the interest rate, for instance, or the price of a guarantee. And so you take development funding, which can be from a climate fund, it could be from a national bank, it could be philanthropic, and that comes in together with the private capital, just a regular bank or a multilateral development bank perhaps. And those are blended together to offer an instrument that's more affordable at a concessional rate. And as mentioned before, that helps transition the market to being able to receive market-based financing later on. And then the project gets funded, and then other market investors can come in on the same project and offer more funding. So with a little bit of grant element, this can bring down the risk of the project and then attract other investors. And eventually, the idea is that there would be market income, which is long-term and sustainable. Mm-hmm. Yeah.
So we do have an example. Stay up here, Jessica, maybe.
Okay.
Why don't you take that mic and I'll take this
All right.
one, all right? And this is a fairly, it may look complex, but it's actually a fairly simple example. It's called the Global Fund for Coral Reefs. And I had the privilege of being in the room when this was conceived. We were hosted at a workshop in Monaco by the Prince, and the Paul Allen Foundation was the main instigator of this, but together with UNDP and UNCDF. And we were able also to get, when I was at WWF, we were able to get $6 million from, that's that project, the 6 countries, $6 million as a supplemental parallel grant financing. So essentially this has a grant fund. It says target 240 million, but the initial funding was 60 million. They're still fundraising for that. At least they have the 60 million from the Paul Allen Foundation and the 6 million from Jeff. I believe they're up to around 100 million now in the grant fund. Then there's an investment fund that's in two, they call them tranches, 2 parts. The senior tranche, well, let me begin with the first loss tranche. The idea there is that, like Jessica was saying, in the blended finance modality, you're trying to encourage, you're de-risking, you're bringing in the other investors. And they went to the GCF, and the Green Climate Fund, and they got 125 million in highly concessional financing. I believe it's 0 interest with a 10-year grace period and maybe a 30-year payback period, something like that. And then that's used to bring in the other investors into the senior tranche. And then this grant funding is used like a project preparation facility, basically to develop the projects, to bring together the public and private sector partners, and to make these blue economy investments. So the core financing for the senior tranche came from BNP Paribas, as well as Paul Allen Foundation. They have another sort of impact investment arm called Vulcan, and they put their money in. And then GCF was the first loss tranche.
Does everyone know what first loss means?
Basically, if the whole thing goes belly up, if the whole thing fails, they get, they're
second in line.
They're
if
second
there's
in
not
line.
enough money
So
to
the
get
private
second.
investors, the private investors get their money back first. Yes. It's actually counterintuitive.
Yes.
The first is second and the second is first. Okay, let's move on to bonds. Now this is a highly established mechanism in the marketplace. They're used by cities to finance their infrastructure development. They're used by corporations to raise capital for investments. If particularly privately held corporations use a lot of bonds because they don't get their capital from equities, from stock market. So it's a debt instrument. It's like a loan. You pay it back, so it's like that. It's wide variety. You see in the title here, you got sustainability bonds that are tied to achieving one or more sustainable development goal. You have climate bonds that are mostly tied to achieving corporate commitments or national commitments for net zero mostly on the climate change mitigation side, but some more now are coming more with climate adaptation, especially in Africa. You have financial institutions issuing these, you have governments issuing them, and you have companies. And there's also a new variety that's become quite popular over the last 5 years or so, particularly for private companies that have made public commitments to achieve net zero by, say, 2040. And then they have a set of practices that they need to implement, which require investments. And the investors in that are willing to take a slightly lower rate of return, a slightly lower interest or coupon in exchange for commitments, and it's measured, it's performance-based. So the company then shows that it's meeting its commitments, it's reducing its net greenhouse gas emissions, for example, or it's making specific investments in renewable energy or energy efficiency improvements, those kinds of things. Now, in the world of the international waters community, this is also applicable. And blue bonds have become kind of a thing. The first big one that was received a lot of publicity was in the Seychelles. Many of you may have this. I mean, this was like New York Times, Washington Post, like go-to example of green bonds to 3 or 4 years. So it received a lot of publicity, but it's fairly simple in its structure. World Bank put up a partial guarantee. We're going to come to guarantees here in a minute, but basically to reassure the marketplace, they put in a guarantee. GEF participated by essentially by paying some of the interest back, so for the investors, so that they were de-risked from that and reassured by Jeff's participation. The proceeds from that were used to set up a climate and adaptation trust for the Seychelles and to endow a blue investment fund that is then looking for private sector participation in things like nature-based, marine tourism, which is a huge part of the Seychelles economy. So this is it's still working. It's been going for 5 or 6 years now, and it's been deemed fairly successful. That's an example that could potentially be emulated elsewhere around the Jeff IW world. I'm not going to spend a lot of time on philanthropy. I think it's very similar in some respects to getting a grant from GEF. The big difference there is it can be a lot simpler. Sorry. I mean, it can be as simple as a handshake with a high wealth individual out of a family office who says, yes, we like your idea. Typically like for the Bezos Foundation, Bezos Earth Fund, I helped with a couple of proposals when I was at WWF. We put an overall proposal for $100 million on one page. So it can be simpler that way. But you're also dealing not with a well-established institution and bureaucracy. So as much as you may complain about the bureaucratic aspects of dealing with multilateral climate and environment funds like GEF, we all love them, but they have their systems and norms, and they're governed. They're not subject to the whims of the foundation board or the high wealth individual or the family. I won't name names, but you want to take the CEO to see your project, but it's a different matter taking Carlos Manuel Rodriguez to see your project than to take Jeff Bezos. I'll just leave it at that. So they have their quirks, but they can be really important. That model I showed you before from WWF with Enduring Earth, it's largely that donor box, the blue box, the triangle, that's mostly foundation money. So it can be a good supplement, grant financing supplement, but it also adds another partner that sometimes requires a bit of hand-holding. Here's that example again. I promised I'd bring it back. So those donors in that blue triangle there, they put up close to $100 million just for the Jeff project. So Jeff has a project following this model in Namibia and Gabon, and also to develop new such projects across Africa. So there's an Africa regional element to it as well. And you can see that the NGOs, that's the other thing about philanthropy, you're often working with NGOs because the foundations, they have a long-standing comfort with especially international NGOs or NGOs from their home country. So if it's a German philanthropy, then they would want to work with a German NGO or something like that, or US like that. So let's talk about that right-hand triangle, the green triangle. The lower rectangle, again, is existing budgetary support, like the line item in the state budget for paying for the Parks and Protected Areas Network system. The salaries of the park guards, the building maintenance and roads maintenance, all of that. And there's also some other sources of finance. It's not always just from the state budget. But let's look at that triangle there to the right. that you're gradually expanding the funding base to reach your goal of having a viable international standard network of parks and protected areas for this country. By the way, in some countries, they're so big that there's thought to break them up. In Indonesia, for example, we experimented with, although it hasn't happened, the idea of breaking up the terrestrial parks from the marine parks and doing one of these just for the marine protected areas network. It's also because it's under a different ministry in Indonesia. So that matters. As Jessica mentioned before with blended finance, this is a simpler example because it's typically one country. Could be transboundary. There are examples of this that have been tried involving multiple countries like a typical IW framework. But having multiple countries with different legal requirements and so forth, it does make it more complex. So you can see here all of the different, these are real examples of revenue sources that have been used to help fill out that green triangle there. I'm not going to read through all of them, but you can see that sometimes it does involve the earmarking of funds. For example, in Colombia, for Herencia Colombia, which is one of these models, the former president of Colombia committed to having a certain portion of the revenues from the carbon tax on the import of fossil fuels go towards this purpose. So that gives you a sense of it. Guarantees. I'm going to let you handle this one.
Okay.
Jessica.
Happy to. Find this page. Okay, so I think about half of people were familiar with guarantees. So what a guarantee is, it's a financial instrument that literally guarantees the repayment of debt or some other financial obligation. It could be debt, it could be a bond. And it pairs well with insurance. So the guarantee would be issued by a financial institution, and it has a price, like a monthly, yearly price. And then if something goes wrong and there's a big problem with the project and they default on the loan, the first thing to kick in would be the guarantee, and they would step in and start making those payments on behalf of the project. And then the second thing that would kick in is the insurance. It takes a while for the insurance to get arranged.
Insurance is mostly for political risk. Mm-hmm. So in the U.S., there's now called the Development Finance Corporation, DFC. It used to be OPIC. Some of you may be familiar with the OPIC institution. And you saw under one of the examples that we gave on the Seychelles, Seychelles, that there was also both the use of these guarantees as well as the political risk insurance.
Yes, and that'll come up again in the Galapagos example. So from the point of an investor, what that does is reduce the risk of the project because it's less risky, they won't get their money back. And you can also think about this as exporting the risk of the product to the issuer of the guarantee. So if you have DFC, Development Finance Corporation, offering a guarantee, insurance. So the risk of the project will be exported to their country. They say, we're taking on the risk, we guarantee this, and so that removes it from the project and makes it more bankable. It's more attractive to a lender because there's lower risk, they won't get paid back. So that's the basic idea of it. Guarantees they're very common and they're very catalytic because it's a catalytic use of concessional funding or grants because just a little bit of grant element can be used in the guarantee, and that they'll only lose that money if there's a default. So a guarantee can be used over and over and over again. And by lowering the risk, a lot more finance can be attracted. So these are popular with climate funds and multilateral banks. So some of the, again, the benefits of a guarantee are reducing country, political, and currency risk, reduce the perception of external risks like an economic shock, reducing pipeline risk. So maybe there's a fund and it's supposed to invest in local companies. So it reduces the risk that not enough companies would be prepared. Attracts new investors, and it decreases the cost of the subsequent loans that would come in because of the reduced risk. It can also extend, maybe a bank is only comfortable making a loan for 10 years, but the project needs a 20-year loan. So with the reduced risk, they would be more comfortable extending the tenor of the loan, the length of the loan to match the needs of the project. And so these are typically issued by MDBs like CAF or IDB, and also development finance institutions like that might be from one country like KfW, Norfund, or U.S. Development Finance.
Yeah, so you probably have all heard by now that there's a push on within G20 to expand the role of the multilateral development banks. They've done that through a variety of mechanisms by loosening the rules about how much capital they have to keep on hand in order to lend out, to expand how much they can lend. But one of their favorite new tools are guarantees, for this reason that Jessica gave. You don't actually have to put up the cash. It's just a promise. So it's a way of, and you can reuse it. So it's a way of really gaining leverage. And we're not going to use the word leverage much here, but it's very, that concept is it's bang for the buck, right? So it's a very important concept as you're going forward. You basically explained this. Yes. But this is just a schematic showing, again, you actually have to create a guarantee facility that then feeds into the project.
Right. And then the financial institution is putting the guarantee, they're offering it. And then, again, the risks go to them. They assume the risks and take them away from the project. And then it's attractive. So that improves the credit and bankability of the project. And then new commercial capital, market-based lending can come into the project.
And as you've seen with some of the examples we've given, this often gets mixed with other mechanisms, gets paired with the political risk insurance, for example, and others, and bonds even. So that's the use of the sort of traditional finance mechanisms, instruments, as applied to the kinds of topics that are the subject of the International Waters Program. But let's look now, we're coming to the close. Let's look now at some more innovative and newer instruments. We have a long history on debt for nature. We have emerging interest in debt for climate. There are the use of conservation concessions. You mentioned like fishing concessions, or from my experience in Indonesia, after forests were logged over and sort of degraded, and the government didn't want to allow more illegal logging to come in, they set up concessions for their restoration and bid that out and let companies put forward proposals for how they would use those forests and rehabilitate them while making some return off those forests. And payment for ecosystem services comes in here. I think virtually everybody was quite familiar with the overall concept, but it has lots of different applications. And finally, as a subset of this, carbon markets and credits, which is probably the largest single area over the next decade for payment for ecosystem services. So debt for nature or debt for climate swaps, they all have a set of common elements. They're used in a situation where you're trying to get out from under some burden that you've taken on in terms of owing money to either a commercial lender or some international, not multilaterals, by the way. Nobody will let you're stuck with your loans from World Bank or the multilateral development banks unless there's some sort of global thing done, organized by the IMF that takes the whole thing down. You're not going to go to I can't tell you, just even yesterday in reading through some of the documents on this, I saw from a fairly well-established think tank, I'll name names, Brookings Institution, suggesting that you could use debt for climate swap to reduce your multilateral loans from World Bank. That's simply not true. Typically, these are commercial loans that have been made either at the sovereign level or to a state-owned corporation, for example, or they're bilateral aid. A lot of the early debt for nature swaps were done through a mechanism under U.S. legislation that allowed the U.S. to forgive loans that developing countries had taken for food aid under something called the PL 480 program, where basically the U.S. provided excess wheat, mostly, to developing countries as part of the World Food Program. But that was technically, it was a loan. And then they forgave that loan. And what they did was they allowed you to pay it back in local currency, not in dollars, and to have it go towards some environmental purpose, usually a national park or something like that. So you can see in the past, these have been relatively small transactions, say around $10 to $20 million. What's happening now is the scale is really ramping up when you get into sovereign debt. And we'll give an example in a minute of the Galapagos debt conversion, where they had sovereign euro bonds, and they were able to save about $1 billion. So the difference between a $20 million debt for nature swap, however nice it might be in a niche in a country like Peru, versus saving $1 billion on your interest payments as a sovereign country is obviously enormous. So let's just look at that example. This one's probably the most complex that we're going to put on the screen, so don't try to absorb it all. You can maybe look at those four little yellow dots there that have sort of footnotes associated with them. So essentially, you had an IDB guarantee. Now you all know what the guarantee is there for and how it works. They use that to help establish this marine bond, the Galapagos marine bond. That SPV is a special purpose vehicle. It's basically, as Jessica's slide she showed you there, where you had a guarantee facility. It's a bit like that. And long story short, as I said, they were able to save money, a lot of money, by restructuring their debt so that it created this conservation activities fund. It created an endowment fund for the long run, a bit like that Enduring Earth model that you saw before. And they had a new loan that stretched out the time and reduced the interest. So the credit was taken into a new impact loan. And at the end of the 17-year period for that new loan, you end up with a $450 million endowment for this fund that will keep that going. So there's a sustainability element to it, combined with having saved yourself $1 billion.
Is that
Yeah.
one clear to people?
It's a, yeah. Mhm. Yeah, you need a mic.
Let's go over it one more time.
Yeah.
Because it's really a cool. It's a really cool solution. It's just a little complicated. So
Not that the IW SAPs are not complicated.
right.
They're used to lots of partners.
So the Ecuadorian government had this huge fiscal burden over here, these existing euro bonds. In the the value of those was 1.6 billion. So they're on the hook to be paying those back. So all of the conservation activities that they wanted to do to protect the oceanic zone around the Galapagos and protect it from climate change and illegal fishing, et cetera, was very difficult to finance. So what can they do?
Sorry, Jessica. Face value, 1.6 billion.
Right.
So that's like your principal, not your interest. Yeah, they're having to pay back. So anyway, keep going.
Yeah, the face value, but in the meantime, due to economic and political issues, the holders of this debt, they're like, I don't know if I'm going to get paid back on this, so I'll sell this to you for 40 cents on the dollar. So this had depreciated way down. So that helps them later buy it back. So what the Ecuadorian government did is set up this special purpose, a special company, and then they got the risk insurance and the guarantee, and that removes the risk from this SPV. And then this line should come here. So the SPV issued these marine bonds, and they're issuing new debt, right? So they're selling these, which raises revenue, and what they sold was the same amount as the risk insurance. So the insurance is completely covering this new debt issuance here.
And they raised $656 million by repurchasing and retiring.
Right. So using this money from the new bonds, they used that to buy back these because they were cheap now to buy back because they had depreciated, and that raised $656 million. And by doing that, they were able to restructure the associated loan here. Mm-hmm. And so now they have this loan that they need to pay back, and they have money coming in from the Galapagos marine bonds, but they have different pricing. So each month they're saving a little bit of money, and also the money that they raised here was greater than what they owe over here. So,
yeah.
Okay.
Yeah, and part of that payment goes into that down below there into the Galapagos Life Fund.
So the difference between the two, they have a better deal now over here. So the difference in their cash flows and the amount of money owed gets to go down here. And now they can fund all of these conservation activities.
Yeah. Obviously, it wasn't, they had to work. The nice thing, as I said at the outset, is that the bond market is well established. And so there are experts who do these kinds of deals all the time. They're constantly refinancing bonds, and bonds in the marketplace, it's a lot harder so if you have a loan from a bank, your bank, I don't know, in the US, if you take out a mortgage on a house, eventually the bank that you cut that deal with to buy your house sells your mortgage to somebody else. But it's a fairly difficult transaction. Bonds are traded on a daily basis. So the price of those bonds is based on whether or not they think you're able to repay them. And so they're adjusting over time. So that allows you to take a cut, to do the so-called haircut, combined with a domestic currency repayment, and to create the incentives for these kinds of deals. They're highly complex, but there are a lot of lawyers involved and a lot of finance specialists involved, but it is something that is feasible, as you can see here, that Ecuador was able to pull off. Okay, how much time are you giving us at this point? We're coming to the end here, so yes, 10 minutes, good. So conservation concessions, I mentioned that before, the experience from Indonesia. There have been examples for marine area concessions where you allow a hotel operator to set up shop with various restrictions on the use of the resource. You have, so ecotourism is a big area in terms of revenues. Usually these are bid out, so you get the best price for the government in terms of the lease or whatever the arrangement is. There are payments back in, so you have to, the companies that exist or are set up to undertake these concessions have to pay revenues into government coffers. They're time bound. Usually they'll give you a bit of a grace period at the beginning on your payments, but then after 5 years, you have to start paying in, something like that. And then there's a limit to it. It's maybe a 15-year concession. And then you have to renew it after that or let it go. The boards for these kinds of things tend to be a mix of public and private. They're an interesting mechanism that for a particular application can be quite useful, particularly if it's involved, especially if it's involved with restoration of a degraded ecosystem. So you can come in and include, say, a no-take zone in a coral reef or something like that as a part of the overall deal that helps to rebuild the health of the ecosystem. And finally, payments for ecosystem services. So wide range of services provided by ecosystems. I don't have to tell that to anybody in this room. And most of them are not priced. So payments for ecosystem services are about creating markets for that, to identify who the beneficiaries are, the primary beneficiaries are of those services, and try to find ways to get them to contribute to the conservation of the resource that is providing those benefits. Sort of typical examples that you hear and you see often would be downstream water users paying for upstream communities to conserve their watersheds, or other examples involving industries that rely on a natural resource. But these can be worked in. There's the new treaty on that's going to be discussed next month in Cali, Colombia, at COP16 of the Convention on Biological Diversity, is trying to set up a framework for genetic resources and the benefits, and making sure that the benefits from their exploitation, well, first of all, that their exploitation is done in a sustainable manner, and second, that the benefits from those genetic resources are given some sort of sovereign rights, and that the benefits, some portion of those, go back to the country where they are collected. And you can see on climate resiliency, there's quite a few nature-based solutions that are being put forward now. I would say it's the fastest growing type of climate change adaptation measure at the moment, are nature-based solutions. They're essentially looking at the water regulatory functions of, or fire suppression, wildfire suppression functions of a healthy watershed or forest, or looking at the mangroves along a coast and the benefits that they provide as a buffer against sea level rise or storm surge, and so forth. So there's a lot of action in this field right now, and I think that holds a lot of promise. But the one that is likely to have the greatest single source of funding and interest is a subset of this, and that's carbon markets. So we don't yet have a new globally accepted regulated carbon market. We may have it. They're trying at COP29 in Baku. They're trying again to sign, you know about this, about Article 6? How many know about Article 6? It's been around for a while, right? So they're trying to cut a deal to replace what used to be the Clean Development Mechanism, essentially, under the Kyoto Protocol, with a new regulated framework for carbon markets globally. But in the meantime, the voluntary carbon market has been really taking off. It's into the billions now. It's not, unfortunately, there are a wide range of standards, And over the last 2 years, the voluntary carbon market, I'm sure anybody who reads the environment literature knows well, it's gone through a rough spell with greenwashing and integrity concerns. And it's partly because there are this proliferation of standards out there on the voluntary side. It's a bit of what we would call in the US the wild, wild west. In fact, they used to call the early carbon market entrepreneurs carbon cowboys. But it is emerging now. There's a movement to consolidate those standards around the gold standard and the Integrity Council and others. And I think, especially once the Article 6 is agreed, that we will see a much more organized relationship between the regulated and the voluntary carbon market. But what's driving it right now, I'll finish, is the corporate commitments to reducing their greenhouse gas emissions. And those of you who may have some experience in this area will know about Scope 1, Scope 2, Scope 3. Basically, your Scope 1 and 2 are the carbon footprint from keeping on these lights here in this room, for example, or your travel for missions to other countries. But when I was involved with putting together the Asian Development Bank's initial carbon footprint calculations, and by far it was the cost of getting our friend Arun here because air travel is a very big carbon consumer. So Scope 3 is your supply chains, and it's very hard to reduce your greenhouse gas emissions within those supply chains. And that's what corporations are using carbon offsets for now. They're investing in projects usually with temporary gains like a forest, although increasingly through mechanical carbon removal from the atmosphere, questionable technology, questionable financial viability at the moment, about $100 per ton. But there's a lot of investment going into that, and eventually it will come down. We'll see. So that's carbon markets. Stay tuned on that. It's going to take off, and it's very applicable to both the green and blue carbon that can be important parts of IW investments. Here's a brief example. I won't go into detail, but this is an alliance that was put together at COP27 and sort of launched at COP28 on trying to increase, to either maintain existing mangrove forests or rehabilitate, put recovery in for those that have been degraded. And it includes attention to carbon markets. You see, they come up repeatedly here as a source of financing. And it also includes use of the private sector. So promoting mangrove positive businesses, productive businesses. So that's your blended finance modality. So you can see these different pieces popping up in these various approaches that are being used around the world. Oh my God, that's big. You may wonder why that's there. So this is a precursor to the next slide, which is to give you some hope that this transition is real. Some of you may recognize really Juhani there, who heads the Coral Triangle Initiative Research Center in Bali. And I was just there about 6 weeks ago, met with her. I had the privilege of being involved with helping set up Coral Triangle Initiative, which had its anchor funding from GEF. Andrew and I worked together on that in various incarnations. And this is just to show you that graduation is possible, because the Coral Triangle Initiative, they essentially set up what amounts to a 6-country treaty, and for the management of the most biodiverse coral ecosystems on the planet. To qualify to be in that 6-country club, you had to prove through the best available science that your reefs had at least 500 hard coral forming species. So they're by far the most biodiverse. And now you can see it's a very complex structure because it's 6 countries and you got to keep everybody happy. It always seems when you have a structure like this that magically there are 6 important topics that have to be tackled. And magically each country gets to lead one of those topics. It's a very good formula. I can strongly recommend it. And that's what was used here too. But it's a very well formed structure now. It's got its own financing from domestic resources with some supplements still from the original founding partners. And then you may wonder, you see down there, it was developed initially by GEF with a $65 million pledge from Monique Barbu at COP13 in Bali. I was in the room. And that's what got everybody moving. So Jeff can be catalytic in these regards. And then we did a coffee table book for the Coral Triangle Initiative with some gorgeous pictures in it. Climate chapter, which yours truly wrote. And then Monique wouldn't let us publish it with the jacket because the Jeff logo wasn't on the front. It was on the back. So we had to move it to the front. And you may notice the Jeff logo is not here. So we're going to put it there. So it shows that Jeff can be catalytic, that graduation is possible with things like this with the Coral Triangle Initiative. And we're just going to take a minute now to wrap up. So sustained financing for your SAPs. Maybe you can join me here. We'll sort of tag team this, Jessica. For the TD, there's some implications for how you do TDAs. There's not a lot in the current guidelines on TDAs about looking for permanent financing. That's going to have to be worked in. You do a lot of review of laws and policies, but not so much on the incentives for financing. That'll have to be worked in. The performance indicators also need to include that as an incentive for you to move forward with that. And you can build in preconditions, the way Jessica was saying, to make it more attractive for the private sector to join you as partners. On the SAP itself, I learned yesterday that roughly half of the current SAPs are new, that they're just getting started. So that doesn't necessarily mean that you can't begin to think about this to incorporate that in. Adaptive management is already a part of your philosophy. So think in terms of working with a wider range of partners with financial sustainability in mind, and begin to build that into the design so that the next time you come around, whether you're in Jeff 9 or Jeff 10, as Andrew said at the outset, he didn't say it very explicitly, but I suspect it means they're going to be looking for those kinds of plans. And that's why we're up here on the stage with you. You may also want to think like that Enduring Earth model about passing the responsibility for the continued management, not like the Coral Triangle model, which is based largely on governments, although they got a lot of partners here. But for that Enduring Earth model, it passes it through to national trust funds mostly, like Funbio or other equivalents in Costa Rica or other countries that have used that model. Mm-hmm. And then we were asked to come up with did you want to add anything on that?
Yeah, so maybe thinking about starting to think now, where can additional revenues come from? What kinds of projects can we do that might generate tourism revenue, et cetera, and who are the different parties in that market? Maybe we're creating a new market for tourism or sustainable fisheries. Who are all the actors and what kind of knowledge development do they need? So how can we already think now about how to increase their capacity, come up the learning curve so that they would be ready to engage in a new market with the next round of funding?
Yes, it's a fundamental mind shift that will take time. We're moving from this sort of cycle of funding to one that thinks in terms of permanence. But it is doable. Graduation is possible. And these finally on these recommendations, have that mindset, begin adopting that sort of mindset. It also gets you, don't forget, it gets you off of the sort of treadmill of having to always come back. If you can think in terms of decoupling yourself from international donors and make it your own, owned by your own country. You have to build that network, as Jessica was just saying. It's going to be a lot of capacity development, but don't think that you have to do some sort of complex Galapagos-style debt conversion. There are lots of expert out there that can help you. You need to widen your stakeholders' scope and participants and begin engaging early with the private sector. And then for Jeff itself, it needs to recognize that these challenges are real and to begin to build, such as we're trying to do today, first steps, that sort of capacity within the IW network. You're going to be hearing more examples of this from our colleagues who'll be speaking in the program. I'm sorry we started a little bit late. We cut a little bit into their time, but hopefully the follow-on presentations and remarks will follow from this set of concepts, and we appreciate the opportunity to share them with you. Thank you.
How are you feeling after this deep dive? I hope you're still energized and you have some real food for thinking. And we hope that this was just, we called it a masterclass. David says that it is just an introduction, and we would like to see it as an introduction of a series of workshops to follow. So we go from the fundamentals into the MDB's experience. It was already mentioned the role of the MDBs and what is the critical role and how these can be coupled, their strategies and the work can be coupled with the Jeff projects. So I would like to call on stage our first two bank representatives, Mr. Arun Abram. I think everyone knows him, Arun. He's a climate and environment finance specialist with over 25 years of experience in Asia and the Pacific. He works for the Asia Development Bank in the Climate Change Resilience and Environment Cluster. And just for the sake of time, I would also like to invite Gareth, if you would like to join us on stage. Gareth Phillips is the manager of Climate Environment Finance at the African Development Bank. I think we can just sit comfortably there so that you can switch right after the presentation of Arun. Arun, don't sit. I think the floor is yours and the stage is yours.
Okay, thank you very much, Konstantina, and thank you, David, for the reminder that I will need to use my frequent flyer points to offset the emissions from the travel to this conference. But I'm going to talk a little bit about ADB's Action Plan for Healthy Oceans and Sustainable Blue Economies. I think there was a couple of slides I had. I'm able to move it. Good. Yeah. I'm just going to talk about our Healthy Ocean Action Plan and some of our preliminary experience. And I'm going to give it a few perspectives on lessons learned, because we're now transitioning to a second phase of that plan. And then I'll talk a little bit about how we use Jeff funds internally at ADB to address ocean health issues, and a little bit more about what I'm calling Show Me the Money. For those of you that are fans of Tom Cruise, is really, I think all of you are interested in accessing finance. And so I'll give you just a few ideas on what we have at ADB for our sovereign and non-sovereign partners. So anyway, the action plan was launched in 2019 at the ADB annual meeting in Fiji. It took a long time for us to get oceans on the ADB agenda. And it's been going for about 5 years now. This is a slide which shows the structure of our environment group at ADB. I just wanted you to see where ocean sits within the priorities that we have there. This is a little bit dated. We have a new environment action plan that's going to the board for decision very soon, if not already. And David has been helping us and advising us on that. But it's roughly similar. And the main pillars of our Healthy Oceans Action Plan are blue economy, ecosystems management, pollution control, and sustainable infrastructure. And under each of those, we have suites of initiatives that fall under those pillars. To support the action plan, we've developed an ocean framework, an ocean finance framework. And that framework was really a guidance on how we would define investments in oceans or ocean health. And so, because we've committed to leverage $5 billion over the 5 years to invest in ocean health initiatives. And so the Ocean Finance Framework draws on the common blue finance principles that have been developed by different organizations. ADB was part of the group. I think UNDP, UNEP, WWF, other organizations have contributed. We needed to develop the eligibility criteria, what constitutes a blue investment, how far upland do you go to determine what is influencing ocean health. So in our case, it's 100 kilometers upland or within the exclusive economic zone of a country. And look at investment criteria. You know, what criteria will we tag an investment as being blue? So among those criteria is that there should be an explicit statement in the loan documentation, for example, about ocean health, and there should be a discrete component addressing ocean health issues, among other criteria. We also use a project classification system at ADB, so we're constantly reviewing our pipelines and indicators that are sector-based, subsectors along different themes to be able to flag or identify projects that would be able to be tagged as ocean finance or ocean health. And so we have a long pipeline. Last year, at the end of last year, 2023, we had committed $3.8 billion. And so I think it's comfortably they will reach the $5 billion target by the end of 2024. But some lessons learned, really, because ADB, as some of you might know, is positioning himself as a climate bank. They've committed $100 billion towards climate investments up to 2023. It's a very big challenge, difficult to do. And so when you're trying to introduce ocean health, a kind of a new theme into a very traditional type of institution, it's very challenging. And so the approach we've learned is that it has to be incremental. It's like a big oil tanker moving along slowly. You don't want to veer it in one direction. So it's really incremental shifts through programming over time, and that can reach significant impact. The second lesson we learned is how to include nature-positive actions in various activities. And as David mentioned, there's now an increasing focus on nature-based solutions. For us now, we're trying to integrate or embed nature-based solutions into detailed engineering designs. So all of the kind of engineering work that goes into infrastructure now can and should look at NBS options. We also want to look at helping to incentivize governments to adopt some of the ocean health principles and actions. And there's a different bunch of different instruments that we're applying. Some of them you've seen here already, and I'll mention it a little later. And also apply elements of blue finance. And so you heard about blue bond. We also are looking at policy-based loans, which is very popular in these countries because it's domestic budget support. And the interesting feature of a policy-based loan is that you can have milestone payments. So the country achieves a certain objective, they can receive the financial payment. And a lot of the policy-based loans we're looking at now are going to the ministries of environment, or forests that are traditionally underfunded. And I'll talk about that in a few minutes. The other lesson is now we're trying to integrate coastal resilience right across the board, both at the policy level at ADB, but also integrating into operations. So coastal resilience in our region is a big deal. And so that's why we're going to introduce it into the next phase. The other lesson is strengthening communications. So when the $5 billion target was announced at the Fiji annual meeting, people thought that ADB has $5 billion to give away. And so the phone was ringing off the hook. And so what it is, it needs to be explained clearly. The messaging is that this is a leveraging of up to $5 billion, not only from ADB, but from its financial partners. And finally, the other game changer that we're trying to consider is influencing procurement. For ADB, that's very important. And one of the areas we're looking at is green cement, particularly in the context of nature-based solutions. So that's something that's coming. In terms of examples, how we use GEF funds at ADB, I think it's important to understand that many of the banks you'll hear from my colleagues, we don't do GEF as a standalone project. There has to be a baseline investment, and the GEF funds have to be strategic and provide some additionality. And so it's a very calculated approach that we take. And that's probably one of the reasons why we don't have a large GEF portfolio. A few examples of how we've used GEF funds in the context of ocean health. Just last week, we announced the board approved a loan for, not a loan, but it's a grant for Tuvalu for infrastructure on water supply, reticulated water supply and sanitation infrastructure, the first in the country. And the investment readiness for that big grant was provided by a GEF project for Tuvalu. And it took a long time because we had to work through COVID. So that was investment readiness at the national level. We also have, I don't want to use the term blended in the pure sense that we've seen it here, but we've integrated components in a big loan that are exclusive to GEF. So one example that's very good in Indonesia, we have a loan on the shrimp value chain. That's a big export product for Indonesia, very important to the economy, but it's also devastating on the environment. So we're looking at everything from the loan, from the brood stock up to the export of the shrimp products, two of the high value products, the Vaname and the Monodon shrimp. But we're using the GEF funds to look at the sub-value chain, which is the feed to shrimp value chain. So when you look at that whole world of fish meal and fish feed, it's a black box. Nobody's done much in that field. And so we've prepared a program with using the GEF funds under our ISLME project to look at how they're defining, identifying and tracking the elements that go into the fish feed and what alternatives can be provided. So we have a very interesting program, and it's really looking at they're calling it trash fish. How do they label trash fish? What constitutes trash fish? So we're going back to the boat, actually, looking at what comes off the vessels and how it gets labeled through the system and gets to the feed mill. And associated with that project in Timor-Leste, we're looking at the seaweed industry to help artisanal seaweed farmers move up the value chain into post-harvest and higher value products. Some of you may know that ADB is part of the leadership group under the Clean and Healthy Ocean Integrated Program, along with FAO, EBRD, and our good friends at CAF. And so under that program, we're providing a regional service offer for our region, but we're focusing on the Bay of Bengal LME, which is a red line LME for hypoxia, for pollution. And we're looking at strengthening the TDA, but focusing on the SAP and strengthening the bankability. The Bob LME SAP is actually quite good, but it didn't bring in the right actors, the ministries of finance, the private sector, And so we're trying to identify projects that would be bankable and offer them up to ADB or other financial institutions. And we will also use some of the GEF funding for a project preparation pilot that will look at integrating hypoxia lens onto some of the investments. Plastics, we have a large plastics program. We have a regional TA that is aligned with investments by a large company, private sector company called Indorama Ventures. I think my colleague, Vincent Aloysius, who's from the private sector, but advising us on this. You'll hear from him next week and in Punta del Este in the plastics panel about his insights on that. And then we have in Indonesia something called plastic sulit. In Bahasa language, sulit is difficult or problematic. And so that GEF funding is being used to address the issues related to low value or no value plastics. And so that set of activities is aligned with a large project, policy-based loan to Indonesia, which is looking at marine debris. And so that's a very large initiative and a priority for government of Indonesia. So those are, and then we also have two other things that are private sector oriented. One of them is the Blue Pacific Finance Hub. It's a kind of a hub accelerator. That's another set of activities we support. We also have a SME Blue Impact Asia project, which is helping SMEs get finance from domestic financial institutions to make them more bankable. And so we've identified some sectors there where we'll work with different types of corporations in the region. Finally, I'd like to tell you about financing partnership facilities. This is a common structure at ADB. An FPF, or a financing partnership facility, is essentially an operational platform. It brings or crowds in partners together to identify and pool resources towards common types of investments. So we have a whole bunch of FPFs at ADB. We have the ORCA, which is the Ocean Resilience Coastal Adaptation. That has a trust fund associated with it. We have water FPF. We have urban FPF. Those are very large, and they have trust funds, a suite of trust funds under each. Some of them are subsector oriented. Some of them are specific to a donor, different types of priorities. And then we have a new initiative, which is a Nature Solutions Finance Hub. That's a project preparation facility that ADB is moving ahead and administering. And it's a technical assistance that is linked to it's called a catalytic fund for nature. And that's a large investment fund. I think it's up to $400 million now, where the Agence Française pour le Développement has invested, the OPEC Fund for International Development, and others. And finally, we're looking at a potential chemicals and waste financing partnership facility where we're applying a chemicals and waste lens onto a lot of the same investments. And that is to address the Stockholm Convention chemicals, but also other chemicals of concern. And I will stop there and happy to answer any questions. Thank you very much.
Yep, that's good. All right. So in view of time, I'll jump straight in. Good morning, everybody. My name is Gareth Phillips. I'm the manager of climate and environmental finance at the African Development Bank. I think I'm coming down with a cold, so 10 to 15 minutes is about as long as I'm going to last anyway, but I know I'm standing between you and coffee, so I'm going to keep it brief. Now, my presentation is a little bit different from what we heard from Arun, and it picks up on some of the points that David and Jessica mentioned. So where they talked about the carbon markets, payment for ecosystem services, bankability, and so on. I'm going to pick up on some of those points and push them a little bit further. And I'm going to give you an example of this instrument we've developed at the African Development Bank called the Adaptation Benefits Mechanism. Now, I know this is an International Waters Conference, and I mean, I'm talking about adaptation, but of course, water is closely linked to adaptation. But the adaptation benefits mechanism is somewhat more broad in its application. It could cover biodiversity as well as adaptation, and under some circumstances, mitigation. But I won't go into that for the interest of time. But now, what we've observed with the problems of financing projects in the adaptation space and in perhaps the water space is that, for example, many of these projects are relatively small scale and context specific. So it means the transaction costs are high and it's difficult to mobilize money for those kinds of activities. The due diligence processes to access grants and loans from the GEF, the GCF, the Climate Investment Funds, Adaptation Funds, and so on, these are becoming overwhelming. The amount of money, the amount of work you have to do to mobilize a grant or a loan really is becoming exhaustive. As David gave the example earlier on, some of these projects lack or have weak cash flows. And that means that if you don't have a cash flow, you're not bankable. And that means you can't access this whole universe of financial models, all the debt capital markets, the guarantees, the concessional loans. And so if you don't have a cash flow, you can't pay back a loan. And that means you're stuck with looking for grant finance. We know that so this lack of cash flows promotes a reliance on grants, and we know there's not enough grant finance available. We can't expect developed country governments to continue providing grants forever. Now, the private sector project developers, so by that I mean the African farmers, the African communities, fisher folk, and so on, not the international project development companies, but the private sector project developers that live in these countries. They're rich in what I describe as the essential assets. So it means that they have the land, the labor, the indigenous technical knowledge, they are custodians of the biodiversity, they access the local governance regimes, and so on. These are all essential ingredients of these projects, but they're totally unrecognized because they don't have cash, they don't have access to money, and therefore they're considered unbankable. And I think that that's a failure of the systems at the moment. We don't recognize the value of these other assets to enable projects to come forward. I mentioned the lack of insufficient grant finance from donor governments. Voluntary commitments are there, but the problem is they're only voluntary. So really they're not enough to rely on. And the conclusion really is that the international climate finance architecture doesn't really work very well for these kinds of projects. It tends to work much better for mitigation projects, for energy sector, infrastructure projects where there are cash flows associated with them. So to address some of these challenges, we've developed and we're piloting the adaptation benefits mechanism, as we call the ABM, and our website is abmechanism.com. So the ABM is a results-based payment instrument, which means that you sign a contract to say, I will pay you when you deliver the results. And if you don't deliver the results, I don't pay you. So you take all the risk as the project developer. But what's interesting about the adaptation benefits mechanism is that we also have the flexibility to define and to design the project, to define the results that the buyer wants to pay for. So actually that means it's like a results-based payment mechanism on steroids. You can do whatever you want. If you can agree with a project developer that they can deliver the results and you find a buyer who's happy to pay for that, and in the middle you get the government to say, yes, I recognize these results and agree that they're going to contribute to my needs, then you can move forward and finance it. There are some key elements to the process. We have an approved methodology in which the project developer uses the approved methodology to design the project. And that approved methodology contains the definition of the adaptation benefit. The buyers sign what we call an adaptation benefit supply agreement, or ABSA. And this contract guarantees revenue to the developer if they deliver the certified adaptation benefits. And then the project developer takes that ABSA, takes that contract to a commercial institution, to a development bank, to borrow the money that they need to build the project. Or they may use it to attract an equity investor, or they can use it to attract technology to come and build the project and so on. So this is it's a key tool, is what we call the ABSA. It's like in the carbon world, an emission reduction purchase agreement. In the energy sector, it's like a power purchase agreement. It's the contract that guarantees that you will get revenues if you deliver the goods. And that's what unlocks the door to access the debt capital markets. And that's the critical thing that we need to do to enable these projects to move forward in a more sustainable manner. Now, I'll just talk briefly about the project cycle. It's simple, and we think it's very robust. It draws heavily on the clean development mechanism. And now, I know the clean development mechanism from the Kyoto Protocol, it had a range of different problems, but it wasn't the project cycle that was the problem. During its 10 years, when the CDM was really going gangbusters, they processed over 12,000 projects. 12,000 projects were submitted with project design documents. That means people invested in preparing that documentation, and they registered over 8,000 of them. So that scale of activity dwarfs what we do with the major climate funds, and it shows how robust the pipeline, the project cycle is. We have a methodology panel that ensures environmental and scientific integrity. We avoid maladaptation. We have robust monitoring, reporting mechanisms, and so on. The results are outputs or outcomes or impacts based on additional inputs. And these are identified through a robust theory of change. So if you have a strong theory of change that you are confident in, it means that if you deliver those outputs, you're confident that you're going to get the outcomes, and you're confident those are going to lead to the impacts. And that's important because you can then pay project developers for the delivery of the outputs. And that's important because it speeds up the whole process. The project developer gets their money back. They can go and do their next project sooner. You reduce the risk. You reduce the financing costs. But if you have a weak theory of change, then the buyer may say, no, I'm not really confident that those outputs are going to result in the outcomes, so I want to wait. I'll pay you at 5 years or 10 years when I can see the impacts. And that's okay. It just slows the process down, and those financing costs and underlying risks remain. We need host country approval because that confirms that the activities contribute to the stated needs of the host country. And these can be the needs that are stated in their nationally determined contributions, in their national adaptation plans, their NBSAPs, or any other kind of published requirements or sort of policy documents where they identify their requirements. And then we have a validation registration process to approve the projects, and a verification certification procedures for the issuance of the certified adaptation benefits. And they're governed by the ABM Executive Committee, which is just the same as the Clean Development Mechanism, the CDM Executive Board, doing the same role. Now, the buyer then redeems the certified adaptation benefits. And if you have the host country approval, then you can report it in the enhanced transparency framework under the Paris Agreement. And that is the mechanism whereby governments are reporting the support that they are giving to developing countries. So this is a way that you can now kind of formalize these activities to say, okay, now I've contributed to a stated need. The government agrees that what I'm delivering is acceptable, and we can now say that that is support given. And that's important because you know that the amount of finance coming for adaptation and many of the kinds of projects we're talking about here is much, much less than the finance we see for mitigation. So it's important that we get better at capturing and reporting that. Now, because the certified adaptation benefits that we generate, they're not fungible. That one project gives this type, another project gives that type. Unlike carbon credits, they're not fungible. So it means there isn't a single price for a certified adaptation benefit. The price instead is determined by the amount of money that you need to mobilize to close the financing gap in the project. So just to take a very simple example, if you have a financing gap of $1 million, and you're going to produce 100,000 certified adaptation benefits, then you price your adaptation benefits at $10 each. You mobilize, you generate the adaptation benefits, you sell them, you get the $1 million that you need to close the financial gap. And that includes the transaction costs, the financing costs, and the project costs, as well as a return on equity or investment for the project developer. So that's all included in the project design document, so there's transparency about how the cost is established. Now, we don't know what the first time we do a mangrove restoration project, we don't know what the costs are going to be. But by the time we've done 2 or 3 mangrove projects, then we will start to have a very good understanding, and that way we'll be able to ensure value for money for the buyers. But this approach to the pricing is also quite interesting because it ensures minimum concessionality. In other words, it means that we give just enough money as is required to make that project work. And that's a very interesting contrast to the carbon markets, where actually that's a profit-making model, a rent-seeking model, whereby the project developer owns an asset and they manage that asset to try to produce as much profit as they can over the lifetime of it. So it's a very interesting contrast. And because the certified adaptation benefits are voluntary instruments and not compliance instruments, we don't come across all these challenges that we face around the mitigation outcomes and the ITMOs under Article 6.2 and 6.4, which David touched on. And I have to say, I'm not as optimistic as David is about the future of the carbon markets. Now, I know what you're all saying. You're thinking, Gareth, this is fantastic. You've absolutely nailed it. This is a great solution, but sadly, it's not working. I can't get it off the ground. Despite 5 years of trying and coming and pitching to audiences like this and doing roadshows and so on, we have not managed to mobilize significant contributions we want to create a fund to sign these adaptation benefit supply agreements. And I don't know why why we're not succeeding. I think, is it too much interest in Article 6.2, 6.4? Certainly, it's the carbon markets are very sexy, or at least they were, but I don't think they are anymore. But I think there's less understanding in Article 6.8, where this instrument sits. We think there's a lack of commitment from governments to finance adaptation. They're more interested in mitigation, and I think that's very short-sighted because we are less exposed to the impacts of climate change today than we're going to be tomorrow. Whereas the mitigation window is closing. We're getting on top of that. So really, we need to do much more around adaptation. But maybe it's the other way around because there isn't a proven mechanism, so maybe governments aren't prepared to make any kind of commitments. So we're now using some of our ACTFCN funds that we have at the African Development Bank to support the development of several new methodologies in the water sector. And one of my colleagues here, Omar, he's developed the slam dam technology. He has a video that he's going to show during the conference next week, and we'll speak on Thursday about how they're working with the adaptation benefits mechanism. We have another one in Madagascar called Sanitap, which is making open wells resilient to cyclones. We're looking at mangrove rehabilitation in Benin and urban drainage in Senegal with plastics blocking the drains and so on. So we're supporting the development of some new methodologies, and we hope to generate our first certified adaptation benefits by 2030. And my last slide, I have some recommendations to take back to Jeff, whether this is Jeff IW or more broadly. But I think there's some things that we could do. First and foremost, we'd love support to create this fund for the ABM to purchase and to sign these adaptation benefit supply agreements. And we'd like funds. We also, if you create those, then you also need to put in place some of the blended finance instruments, the guarantees and the loans that you saw during the masterclass. So we need to create those kinds of instruments as well. But that's not difficult. That's bread and butter for development finance institutions. So we can do that. We need to develop and implement and study more results-based payments instruments because they're extremely powerful. Through a results-based payment instrument, you empower and you enable the private sector to come up with innovative solutions to solve problems. And there's nothing like the promise of a profit to get the private sector thinking and solving problems. You can reduce the burden of due diligence by signing these results-based payment contracts, encouraging the private sector to take the risk, encourage host countries to define their needs through in terms of measurable outputs and impacts that can be met through these inputs. So be specific in their national adaptation plan. Say, we have 30 kilometers of coastline that need to be rehabilitated in this area, or we have a fishing community that needs support in this area. So be specific so that we can do those things. We need to support further understanding of Article 6.8 of the Paris Agreement. I'm sure most of you in this room haven't read or studied Article 6.8, but I really believe that actually it is a much more powerful instrument than 6.2 and 6.4. And finally, and this goes back to one of David's first points, it's about the regulatory environment. We need to encourage developed country governments and countries that can afford it to take commitments about funding adaptation. At the moment, everybody in this room is getting a free ride on adaptation. We all contribute to the cost of mitigation through our cost-reflective tariffs for energy or emissions trading schemes and so on, but nobody is contributing consistently to the cost of adaptation. And that is the nut that we need to crack. And I think that an instrument like the ABM or other kinds of instruments might give governments confidence to actually say, okay, we're going to start making commitments to how much we're going to finance for adaptation. And with that, I'm going to stop. Thank you very much for your attention.
I would like to thank very much both of our speakers. Unfortunately, we don't have time for a discussion right now, but you can take the discussion in the coffee break. And of course, in the next slot where we have the other two MDBs with us, IDB and CAF, we can have a Q&A session there. And any questions in the meantime, you can take them during the coffee break, which starts right now. But before you go and grab your coffee, please meet us right on the right. We're going through the gallery to take a photo there, a family photo to remember, this first gathering after 6 years of the Jeff IW community. Thank you very much. See you out there. Thank you. I know you're all so excited meeting your colleagues and friends and new people, and you have so much to share. But you will have a 2-hour ride until Punta. You can discuss as much as you want. And of course, from this afternoon at 6:30, when we're meeting in Punta del Este for the soft opening of IWC10, you'll have all opportunities to exchange, to network, to share. But until then, please resume your seats. Thank you. Because it's time to call on stage our two next speakers, who are not on this slide. But I would like to call on stage Dr. Raúl Muñoz Castillo, the Water Resources and Climate Change Adaptation Senior Specialist of the Inter-American Development Bank, and Mr. René Garcia Gomez Palau from CAF. I think he's already a celebrity. He doesn't need any introduction. He will just introduce himself. So, René, you can take your seat there, and I'm handing over directly to Raúl for his intervention. Thank you.
Thank you, Constantina. Thank you to IWLearn, CAF, the Secretariat for the invitation, having today the IDB here. So this presentation is going to be less focusing hardcore finance. So we are going to talk more about the perspective, our perspective, and the work we do in this new initiative for transboundary water management, international waters, that we launched like 4 years ago. So I'm going back, or going straight to one of the main questions, that what means for you or for us, in this case, a bankable investment, a bankable project. We want to refer to this slide. So this is the work proposal for water security. It's pretty much our new program for water resource management. And with this, we are trying basically to work to enhance our capabilities within the bank, and also for our clients or the countries or the counterparts, informing building blocks that we consider fundamental if we want to think in resilient investments and sustainable investments. Pretty much, we need to work in having an effective mainstreaming of MBS and green infrastructure in our pipeline portfolio and an investment plan of the countries. Is something very easy to say, but we are working with that to support that with science. So this work proposal is pretty much based on innovation. We are working to enhance the access to science, data, information, and decision support tools for having well and better decision making. We are also working in having a better understanding of climate change impacts in the water sector and water-dependent sectors. We think that mainstreaming the Nexus approach into investment planning is key. It's the fundamental keystone for adaptation. And of course, giving access to sustainable and innovative finance, but also to more flexible institutional and more adaptive institutional frameworks. So those are the main components that we are trying to incorporate in our programs. Of course, working with GF Resources, which is a catalytic source of funding for us to mainstream water security in the region. And those are the main components, either for transboundary settings or not. Talking about specific financial mechanisms and instruments, some of them were mentioned already by David and the colleagues. We provide, for the most part, grants to enable conditions to build capacity and to, for instance, pay for feasibility studies. So we enable the condition for the investment percent. We have the loan. We have loans, either in standalone or blended finance with other sources as in concessional, more concessional way as ours. In terms of in the context of international waters, we are working now in a new facility. This integration facility has two tools or two mechanisms that are offered to the countries in the region to get access to technical resources for regional projects. We have a regional public good in the Trujillo Basin for working in the resiliency of the agro sector and the supply chains in Central America associated to the production in the system. And we have another tool, another instrument, which is this facility is providing out of the envelope resources in terms of loan for those countries that who come to the bank with actual regional projects, so they can have over the cap resources to invest if they propose an actual regional transboundary project in this case. We are working to get access to climate finance, green finance. We're working with the GF, with the GCF, with the Adaptation Fund, and some others. And we have a specific innovative financial solutions, some of them funded with the support of the GF, the water funds. We are working in thematic bonds, with green bonds, climate bonds, resilience bonds, parametric insurance in the Caribbean, revolving funds in the Caribbean as well with the fund, with the GF. And we are trying to pilot or try to see how to pilot water markets, for instance. We have some transversal initiatives. David mentioned this kind of instrument in his presentation. BitClima is one of these, by which we are repaying the national debt of a given country if they come with a loan that actually is investing in investments which show additionality in terms of either mitigation or adaptation. We have the NDC accelerator, which actually enables infrastructure investment that shows support in the countries in terms of alignment with the Paris Agreement or their own national determined contributions, or the Natural Capital Lab. So for the mainstreaming of investments, sorry, in green infrastructure and MBS. I'm gonna talk about some examples in the region in which we are working with this kind of programmatic approach. We're trying to tackle all these elements. And the first one is the Amazon. We have this GF project. It's going to be approved soon, working with UNEP in implementation and in coordinating with OTCI and of course, the riparian countries to invest in science to have a better understanding of this complex system, the groundwater system in the Amazon basin, to provide a management framework, as a SAP, and to pilot specific interventions to provide water security in cross-border areas. We are trying to advance this work actually with technical cooperation resources that we want, that we expect to use as an input for the design of the TDA and the SAP. We have been working with this project to the design of the first regional transboundary investment plan for the water, sanitation, and solid waste in the Amazon basin, working with the riparian countries. It has been 2 years working on this. And as you may see, the investments that are prioritized are not by coincidence, actually, located in cross-border areas, which in many cases are matching the places in which we are piloting the interventions with the GEF. Zooming out, because we also want to provide support in planning investments in a systemic way, from a basin perspective. We are working in this model. It's a participatory modeling exercise with the countries. It's a nexus analysis. We build up probably the most finest resolution water balance in the Amazon, with around 8,000 subwaters already parameterized and calibrated, and upon which we have a socioeconomic model. And we are working with the countries, and we have a large working group to assess their own management and planning and investment plans within the basin from the different sectors, try to see how resilient they are, how sustainable they are when they put together from this perspective, systemic view, and how are the impacts among them and among the sectors, and how are the mutual benefits to inform better this planning. In terms of science and technical support, we are also supporting the regional observatory for the Amazon with technical cooperation resources to help them to process better data, more data, calibrate the data, process data, incorporate in this system. It's a visualization tool that the countries are feeding together and trying to use to have joint management decision making. And we are using all these resources actually to scale up investments. This is pretty much has been a common request from the countries. So the need of extra funding, preferably in terms of climate funds, to implement larger projects that could address the challenges of the basin in terms of water resilience. And it's a $400 million facility that we expect to have approved early next year. Has three main components. And the first component is $30 million for providing access to grants for improving information, modeling tools, early warning systems, and so on for the basin and the countries of the basin. The second component to implement specific investments in water supply, sanitation, solid waste, and drainage, which demonstrate a specific additionality in terms of climate, for the most part adaptation. And the third component, which provides another envelope of $50 million for enhancing the capacities in the basin for precisely promoting transboundary cooperation and joint management and planning. So we are actually working pretty much in parallel with the GF design, and we expect to we see this like a large envelope of resources, and we won't actually, because they are going to be approved around the same time, when we are in execution, try to complement each other and feed each other so we can maximize the work we do with the countries with these funds. The Pantanal project, this is a flagship project for us, the first one we approved in our initiative, thanks to the GF. We pick up from the International Declaration for Cooperation in the World Water Forum back in 2018. Is most likely the largest and most biodiverse wetland in the world, providing key ecosystem and climate services to the whole South American region. It's a $8 million project in implementation with NEP. And we are, of course, again, trying to invest in the same. We are working in science and technology for the TDA, planning with the SAP, and piloting on specific interventions. We are trying to actually advance the work, and we are trying to actually shape this SAP with our instruments and the know-how we have with certain and specific innovative financial solutions that we expect to be part of the SAP design and the SAP implementation. So in this sense, we have two projects for which we are supporting the SAP, the TDA in particular and the SAP. So we are developing the first water balance at tridimensional level for the system. It's based in hydrodynamics. It's a very complex system. We are working in that with Deltares, using the same decision support tool, or extending the capability of the same decision support tool that already is in place in La Plata Basin, the Pantanal is part of La Plata, to provide this tool to the countries for actually to start to think about together in different investment scenarios. And I'm saying this because it's very easy to talk about financial mechanisms, but what we are facing, and that's we wanted to focus in this presentation on this, is that in many cases you need to have these technical elements, these technical inputs, if you want to successfully talk in specifics about what is the design of a program for payment of ecosystem services. You want to think in a resilient bond. You want to design a water fund. So with Brazil, for instance, we are working in parallel with another technical cooperation project. They have their own watershed plan, or basin plan, the Upper Paraguay basin plan. We are helping them to downscale this for actual implementation. So we have been working with them to identify cross-sector interventions in the field, in the basin, to identify specific opportunities for MBS that could fit the design of a specific financial instruments to be included in the SAP, to build up the first water quality monitoring system on the basin in this system, which could be pretty much the base for the design of certain types of financial mechanisms that we are thinking on. The Water Funds Program, most likely our flagship project for investing in MBAs as a means for water security in urban level. So we have been working with this program thanks to the Jeff and other partners in the context of the Latin American Water Funds Partnership for the last 10 years. With that, we have been able to provide support to the creation and operation of 26 funds, 4 funds in design right now, in a total of 8 countries, working with the main municipalities and water operators. We have been able to leverage resources from the private sector in an effective manner, and in many cases, and this is something interesting, to provide governance in places where either was weak or, I could say, non-existent. So, and talking about scaling up, use resources to support synergies, synergetic initiatives and programs in Latin America. We are using our experience with this program, with the Water Funds Program, and our know-how to support another effort, which is carried out now also with GEF resources and led by UNED in the Trifinio system. So we support the pre-feasibility study for the Transnational Transboundary Water Fund in Trifinio, where that we expect that could be or will be implemented with the capital seed that is provided by the GF and some other donors. And we're scaling up has been very challenging. So, and this is the reality when you would want to design an instrument that is based on nature. So it has been very challenging because we're scaling up at spatial level. It's at transboundary water fund, but also at sectorial level, which is more challenging in there. So I've been working with municipalities, water operators, but also with the agro sector and the energy sector. Constantina is saying, shut up. So I'm gonna, I have just 2 slides. I want also to mention the crew. So I have my colleagues from the crew. They'll talk on detail on the conference these days about this successful program in the Caribbean to support the countries, not only to enhance capacities for wastewater management and investments, but also to pilot and implement specific revolving funds. And in parallel, talking about synergies, for instance, we have this program, QUIC, by which we are today supporting the Caribbean region, working with the utilities in particular, to implement parametric insurances. We are providing input to get there more resources in terms of capacity for preparedness for recovery after events, identify a specific investment for resilience, but also to implement and pilot this innovative solution that actually is having a lot of success, and we have different donors and partners that are interested in scale that this program. So thank you so much for your attention. I hope to see you all in the conference.
René. So René will introduce himself because he's such a celebrity that everyone knows him. I said, I don't have your bio, and he says, everyone knows me. So please, no. I'm handing over to René.
Thank you, Constantina. No, I'm René Gomez Garcia, Bolivian civil engineer and hydrologist by formation. I have a PhD from Utah State. And I work for CAF, close to 20 years. I've been in different positions. Right now, I'm senior executive for climate and biodiversity. Glad to be with you, and thank you, Constantina. I feel that I need to show you this slide because of the quiz. Late yesterday, afternoon. CAF is a multilateral financial institution. Owned by 22 countries in Latin America and the Caribbean. CAF is a GEF implementing agency accredited and has strong commitments towards become green. It's announced a commitment to allocate 25 billion over the next 5 years to green operations, and also to devote 1.25 billion for blue financing. Sorry. throughout this presentation, I will try to make a proposal. I mean, to solve this apparent Gordian knot, which is, I mean, how a bank can become greener and how a green project become bankable. I mean, quoting my dear friend Nacho. And I think this is what we have in front, and one of the main. I mean, we have different challenges, and one of those is how the co-financing could be a real. Could be a real co-financing and could be effective and could add up financially and with real outcomes and outputs to the project. So this is, a biactive relationship in which we need to work with the countries, with the local communities, with local financial communities as well, and also inside our own organizations. How we can mainstream this kind of contents, how the IDTs and SAPs could enrich, could strengthen, the bank operations, but at the same time, how we can add up, and include and make feasible the different activities and structure that every IW project might need. So throughout this experience, I like to mention the project in La Plata Basin. In La Plata Basin, for example, we had the opportunity, we had the privilege that to work in this PPM, and in which we supported with key components throughout the execution phase. So when we will be able ready to design a full-size project, we already have a toolbox. We already have identified about 15 investment projects, a methodology, a support system for decision taking, and many very important tools which are very useful and for the next stage, and also to make sure that the future co-finance is really going to be part of sound projects, and how these projects are prioritized by every country, and how they are and how they build ownership throughout the financial areas, and environmental areas. Also, I'd like to share with you, what's the context and in which CAF works. CAF, has a vision and a strategy in which, besides, for example, strategical ecosystems, also is the sustainable blue economy, biodiversity, and climate and environment is key. And let me read this paragraph proven for us. Blue economy is a proven contribution to ocean and coastal health that seeks to increase and restore the comprehensiveness, connectivity, and resilience of basin, river, marine, and coastal ecosystems, the effective restoration of degraded ecosystems, conserving and managing marine protected areas, and other effective conservation strategies. Conserve species, stop extinction, and maintain genetic diversity also includes actions to prevent or reduce land-based pollution or sedimentation that affects river and marine ecosystems. In this case, also, as accredited agency for GEF, Adaptation Fund, and Green Climate Fund, we established a bridge. It is biactive bridge that we told. I told you. So we not also can access to these kind of funds, but also the methodologies and the kind of philosophies and approaches could be could be part of the CAF greening process. Let me show you this virtuous, what we call virtuous cycle, in which the green and blue finance, CAF, runs its logical trajectory. We have we have a bottom line. And this bottom line is to count to have available projects with transboundary impacts. That's what we know in this case. But also, we know that there's a lot of needs, there's a lot of requirements that have to be complied to reach before financing is truly available for every one of these operations. Most of the cases, the first step is a pre-investment facility. Throughout the JEF project, the size of these projects are not as big as large enough to finance a detailed financial design. So a catalytic support is needed. So CAS put in place a green finance pre-investment facility, which in several cases also could be part of a grant. This allows us to come up with business plan, business models, the projects, the investment projects by itself could be eligible for different kind of investments. And we talk this morning about blended finance. When we talk co-financing or refinancing for strategic financial partners that CAF has, or also with all this documentation and indicators, access to green or blue bonds throughout, and use these proceeds again for the different, this virtuous cycle. Also, we don't need to forget that from one hand, if we have the financing for this project, for another hand, we need to have the enabling activities. So this critical mass in every country and every community could reach, the levels enough to be part, to understand, and also to be full beneficiaries of these projects. I just want to point a few things. Is that one of the first steps, in greening operations in CAF is to have in place, to design, and also to operate a toolbox and in which taxonomy, for example, but most, and these slides show us the blue and green, funding eligibility criteria and activities. This is how every operation that we identify or we have access or we are consultant, where we try to match in the first step, but also to enhance every aspect that this operation might have in order to meet these eligibility criteria and activities. In this case, with what's highlighted in yellow, we have ecosystem-based adaptation, which by their category already implies that should be green or blue, or a sustainable. Suppose that it has to be a sustainable operation, but it needs to be, have the required components, and with the kind of indicators and with the kind of contents in such an order to be eligible. And this is something that that we should work in this biactive relationship in order to green an operation, and also that an operation could be greened. Another eligible category would be the resilient infrastructure for the adaptation of the population and adverse events of climate change. The same way, this operation at first sight probably could appear that are 100% green or 100% blue, but we need to work deeper and according methodologies, so we can ensure that the eligibility is real and could be complained all along the project cycle. I have here this the Amazon Bioma program, in which CAF will invest up $2 billion until 2030. It positions itself as a strategic ally in the region, its biodiversity and its people, which, expects to mobilize, at least $30 billion in alliance with the Green Coalition Development Banks for the Amazon. Here with us is my colleague Cecilia Guerra, who's gonna touch this a little bit later in their intervention. But this is the scheme, and in which we understand and we develop this approach. In the next slides, I'd like to show you two different examples. One for the private sector, and another one is for the public sector. There are these two products and the financial products which CAF has designed and put in place, and so could be useful. For a JEP projects. Which are in the design phase to take into account and have a look at those. We have the American Flyways Initiative. This is being worked to promote the protection, conservation, and restoration of key biodiversity sites. But this means mainly that to generate real and credible indicators for biodiversity conservation. So these bioindicators could be used as a support of biodiversity, for biodiversity conservation indexes in infrastructure projects, for example. So they can certify and they can comply, and also they can, and conservation could be verified. And at the end of the day, these indicators are very useful for financial operations and also to demonstrate, their performance for conservation. There are different types prone to investments. Here we list the different kind of infrastructure, and also, by the other hand, the nature-based solutions, which are being mentioned before. I think something very important is that this model has this facility for project preparation, has this green-blue financing facility, in which, for example, besides that we heard this morning, here we can find this to develop the financial instruments, which part of this toolbox. They provide the cascading payment scheme. This all along the indicators progress, the due diligence, disbursement of funds, monitoring, reporting, and capital increase. So it's the whole value chain and of financial operation may need. And never forget the enable conditions facility, which the base and this platform in which every one of these operations could go through. This is a result-based financial instrument in which needs to comply with every step of the way, with defining performance indicators and performance objectives and validation. And after that would be eligible for the corresponding payment. And at the same time is an strategical tool to increase the flow of green resources with different kind of tools. We have another challenge, which is the project cycle and the green operation cycle. That's another challenge that we have. I think every implementing agency has how to fit both project cycles, and for financial operation, this challenge is even harder. So we need to work in advance and have as we told in the beginning, try to have especially in the SAP in timely manner the material needed in order to have a sound. Yep. Thank you. So I like to end our presentation telling you that we have I mean, that according this kind of design that in which we're working with, and opportunities that IW projects have. For example, once we execute project to come up with financial products like La Plata Basin bonds or the Guarani Aquifer bonds. So after that, I mean, helping, supporting the countries to develop a sound project investment portfolio in such a way they could be able and have the size and the quality to be part of this kind of financial tools. So the full strength of development bank could be used and benefits could be both ways. Well, I think that time's up, and thank you.
Thank you very much, René. It seems that there's so much to digest. All these, what the banks are doing in their portfolios, the mechanisms that they are applying, the exams that they are applying. Unfortunately, we are a bit, we don't really have much time left because we have to leave, the buses need to leave, on time. And we have a very interesting panel coming up. So while you didn't get your chance to have a discussion with the representatives of these four MDBs, now you will have the opportunity to have a discussion, and to have a panel discussion with representatives of two MDBs. So we have Ms. Paula Roberts from ADB and Ms. Cecilia Guerra from CAF, but we also IADB. Then you have to tell me, why is it IDB or IADB? Apologies, that was a typo. And also with us, Ms. Vivian Quinhaga from Orasecom and Ms. Samiso Kumbirai from Global Water Partnership, the Africa Coordination Unit. Please, ladies, please come on stage. And while I also call at the same time, I also call Andrew from the JEF Secretariat just to put the pieces together and hand over to this all-women panel, because it seems that we have an all-men discussion beforehand. So we're trying to balance things out. Thank you very much. Yes.
Thanks, Constantina. Good afternoon, everyone. It's getting late I guess it's early morning or late afternoon or mid-afternoon, but we're all tired. I don't even know what time it is. I've been on too many airplanes recently. I'm just going to give a couple of kind of framing remarks before I hand it over to David to really moderate this panel. So unfortunately, you're not going to hear too much from me this morning, but you'll hear from us a little bit more this week. I think one thing that really can summarize so far we've heard today is that it's no surprise sustainable funding and financing are rapidly growing areas of interest, not just to the JEF, but to the entire conservation community. The MDBs are really leading the way on this. We have a lot to learn from them. I think that was clear from the sessions today. And I think hopefully this week we'll be asking lots of questions to our colleagues to see how we can apply the lessons they've learned to our own projects. As an example, the number of conservation trust funds that we've seen around the world have grown so much so that they are starting to coordinate among themselves to represent on the global platform as a new entity. Explosions of new innovative financing tools, lots of experimentation, and seeing how we can unlock these investments in capital to really benefit the environment. But if we can be honest with ourselves within international waters, our portfolio alone, I think we can say we've been a little bit late to this dance. We have a lot to learn. There's a lot of opportunities to apply this, but we're not doing so at the moment. A lot of the proposals we see really don't reflect this innovation. I think if we can be pushing ourselves to think a little bit more creatively, we've got a lot of opportunity. As examples, David this morning mentioned Enduring Earth, this project finance for permanence. We're starting to see regional projects being discussed, which is a really exciting and I think much more complex approach to this, but offers a lot of opportunities for IW. We heard from Raul in the water funds, blue bonds, species-specific bonds, ecosystem-based bonds, debt for nature swaps, guarantees. We're having conversations on a lot of these topics, but how can we mainstream this across our portfolio? If you know the Jeff well, we have a non-grant instrument window, but if you know how that works, it's competitive. But in fact, we can apply this non-grant policies into Jeff International Water projects through the focal area funding. We don't have to apply to the NGI window. We can apply it directly to IW itself. So there's a lot of processes in place to enable us to see this happen quicker. But really the biggest opportunity, and David and I actually met last week, so he shared a lot of the ideas that I'm just reinforcing now. The biggest opportunity that we see at the Jeff is applying this innovative financing through the TDA SAP process. How do we link this long-term view, not on just benefiting the environment and the governance behind it, but also in the financing with it? You know, what is the business model for an LME to be financing itself over the next 50 or 100 years, or a river basin organization? This is what we need to be thinking about. And if I can be brutally honest, how does that plan essentially reduce the reliance on Jeff funding? If you're still asking for Jeff funding in 50 years, I would call that a failure. You shouldn't be coming to us. The Jeff may not even be around in 50 years. To be planning based on that is, I think, is not a great way of really thinking about the long-term benefits to the environment. So I don't think it's really a hidden agenda to say that we'd love to see more of this in Jeff 8, Jeff 9 projects that you're proposing to us, and not just proposing to us, but talking to countries, talking to governments, talking to other partners. So please bring this back to your project partners, your capitals, to be thinking about that more concretely, because we're really excited to see how we can really prioritize this within the international waters portfolio. So that's all I wanted to say today, was really just kind of encourage everyone to get out there and adopt what we've learned and apply it to our thinking moving forward. So I guess I'll bring David up to moderate this panel. Thank you.
Thank you, Andrew. Somehow with the logistics between the two, we ended up on the opposite sides of the stage here. So I'm going to do my best to move this mic over here and work from my notes. You've already been briefly introduced in terms of your institutional affiliations, but maybe what we can do is as you oh, up here. Oh, even better. All right, thanks. If it worked. And it'd be all right, that's slightly better. Thank you. Thanks very much. So maybe you can also say a few words about your own self-introduction the first time you speak. And we're going to go, Vivian, I didn't know what order they were going to put this up here, but there we have it. So, but you're in the chairs there, so why don't we go from left to right? And if I would just ask you, and then Paula, you can go next, to say a word or two in reaction to what you've heard today, both in terms of positive as well as maybe some challenges. And if you're going to talk about challenges, try to include some solutions as well, please. Why don't you start us off?
Right. Good afternoon, everyone. Okay, my name is There. I am from the Orange Senku River Commission. It's a river basin organization shared by 4 countries. That will be Lesotho, South Africa, Namibia, and Botswana. So it's in the southern part of Africa. But I should say the project that I'm currently working on, I'm working as a project coordinator there. It's my second IW project. So before Orasecom, I had the privilege to work on the marine side, where I worked with the Benguela Current Convention, also as a sub-coordinator. So yeah, the one thing that really came to my mind yesterday when I was asked to speak about sustainable financing, sustainability of Jeff Finance projects, one of the first things that I thought about is that we need to break silos. I've had the opportunity to interact with LMEs, RBOs in Africa mainly, and you would see that we develop TDA and good SAP documents, mainly with the idea of getting financing from the JEF, which is not a bad thing. But at the same time, you will see an RBO developing an IWRM plan because they want to attract funding from the EU or from GIZ. And then we even go further and do climate resilient investment plans for the AFDB mainly. But if you really look at the TDA process, if I use the example of Orasacom, there are three main issues that we've identified. It's water security, it's pollution, it's catchment degradation. The very same issues, we would address them from a different lens in the different planning documents that we have. So when I'm saying we need to break silos, it's really for the RBOs and the LMEs to do an intro inspect and then develop a one plan that is owned by that RBO or LME. It should not be done because it's for the JEF, it's for AFDB or whatever, because then we are compromising sustainability. And then having said that, another silo which I've also come across and I have been, it has been a mistake from my side as well, is weak linkages within the project itself. That we work on outcomes, we work on outputs. Sometimes we are working on developing the SAP or updating the SAP. Then we've got another component or another outcome where we're looking at private sector engagement, for example. But we don't engage the private sector enough as we develop our TDA or update our SAPs. And I've also learned that sometimes, sorry, I'll try to be short. When we do our stakeholder engagement with the private sector, sometimes we invite them to our workshops, sometimes we've got working groups, but they are not always available. But what we have learned now is that sometimes we need to go and see them individually. You know, they don't always understand the issues that we are working on, but we've been amazed with the level of support that we've been getting when we knock on those doors. And sometimes it's not that we have to go there physically. I think thanks to COVID, we have all learned how to use virtual technology, and it has been working for us. So yeah, breaking silos for me is a key one. A takeaway from this session for me was really the role of regional institutions, that we perhaps also start looking at regional projects. We've got how many RBOs in our area? We've got many RBOs, same countries sharing the same RBOs. And we sometimes use the same JEF funding to develop, for example, an EIA protocol for one RBO, and the same JEF funding to develop another EIA protocol for another base RBO. And most of the time, it's the same consultants who will do it for us. It's more or less the same documents that we get. So I actually think this whole idea of regional projects, regional programming, it's something really key that we need to take forward. I'll have a lot to say, but let me end here.
Thank you. No, that's really some really helpful observations as well as some recommendations from your own experience. A little sorry to hear it's still going on that way. Some years ago, I helped to prepare the protocol on shared water courses for SADC, which included your basin. And maybe offline we can talk about how that's going as well. But it did feed into the international agreement on shared water courses management between upstream and downstream states. So over to you, Paula. You'll get another chance in the next round. Go ahead.
Thank you, David. You hear me? Yeah? Well, I'm Paula Roberts. I'm from IDB, not ADB. I'm from the Inter-American Development Bank. I'm based in Washington, and I work with Raul Munoz. He briefly present the portfolio. I work with several GEF-IW projects. I have two main takeaways from today's session. I think we all agree on how important it is to mix different sources of funding, different instruments, mechanisms. One question that came to my mind today is how these new trends are affecting the way we are designing the projects, the way we have to think about the projects. Some rationale has to change. Which risks we have new risks now during execution, which barriers we have to focus on, and also the theory of change of our projects needs now to include also the climate rationale. No, so this is one big aspect for us. Now IDB is piloting the BID Clima initiative. This also requires us to think about the indicators. For instance, this initiative, the BID Clima, requires us not just to think about adaptation benefits, and Gareth also touched upon that topic, but also about how the government and how is the political appropriation of these new changes that we want to propose. And also, last but not least, how the country is monitoring, reporting, and also doing the verification of the adaptation benefits. So that in terms of project design, but also in terms of complexity, one question that came to my mind today is how these new trends are adding more complexity sometimes to the design and the execution and the implementation. How we will manage these transactional costs, and how we will focus on build capacities in the governments. For instance, we are also piloting some nature-based solutions in the loans of IDB in Dominican Republic, and we provided a lot of technical resources and technical assistance with grants to enhance the approach. So yeah, these are the two main topics. I wish this topic can extend 2 days. I think all the public is very interesting. And yeah, thank you, David.
Thank you. Appreciate that. So moving right along, Shamiso, please also include a little bit of self-introduction so people understand what you're working on before you give your remarks. Thanks.
Thanks very much, David. Wonderful to be here, and really fascinating and interesting to hear about all of the different approaches being taken by the different regions and the various banks. My name is Shamiso Kumbarai. I am an investment specialist at the Global Water Partnership Southern Africa, which also serves as the overall Africa Coordination Unit. At GWP SA, we have been supporting the development and implementation of several GEF projects within Southern Africa, as well as the continent at large, primarily on the African SID side. And we've also been hosting, or we are hosting, the Continental Africa Water Investment Program, which is an African Union-led initiative that aims to mobilize $30 billion by the year 2030 towards closing the water investment gap on the continent. And I think, you know, in the presentations that we've seen today, we've seen sort of quite similar approaches and models that the Africa Water Investment Program is sort of looking to implement to try and narrow this water investment gap. But speaking to the presentations, I think the key thing that needs to be considered, I think it was presented in one of the speeches today, is the need to look at the idea of aggregation, both beyond aggregating funding resources, but aggregating projects themselves to really sort of begin to look at these investments across the water value chain. And this is really one of the key things that we're looking to try to do as part of the Continental Africa Water Investment Program, and building on the work that that's been done through the SAPs and the identification of various investment opportunities. So seeing how we can begin to scale that up, and I'll be happy to share more during the course of this presentation.
Great, thanks so much. And last but not least, Cecilia, we heard sort of a tour of force in terms of the CAF programming from your colleague Renee, but maybe you'll have some different or unique perspectives of your own, please, and do give a little sense of your work within CAF. Thanks.
Thank you, David. Thank you, everyone. I appreciate this opportunity to share some ideas. I have 5 ideas, but I prefer, if you don't mind, speaking Spanish. Okay. De las presentaciones que hubo hoy, hay una serie de puntos que me encantaría resaltar. Entre ellos está que nosotros necesitamos políticas claras y reglamentaciones claras para este tipo de financiamiento. Hay que entender dos cosas. Primero, los modelos de cooperación. Sin estos modelos bien establecidos, donde realmente encontremos el financiamiento con un lenguaje verde y el verde con un lenguaje de financiamiento, no vamos a lograr llegar a las metas que esperamos. Y la segunda cosa importante es, recordemos que todos estos proyectos financiados por el GEF, por el banco, por CAF, si no llegan a la gente que está en el territorio, no se puede hablar de éxitos. Entonces, son dos cosas importantes. Los laboratorios de innovación son fundamentales, porque en ellos hay oportunidades de crecimiento, de aceleración, de que los proyectos, por ejemplo, de soluciones basadas en la naturaleza, sean financiados. Sin esos laboratorios de innovación, muy poco se puede hacer. Los costos de transacción y el impacto de estos proyectos. Tenemos que reducir esos costos de transacción de estos proyectos porque eliminan muchos del financiamiento que se implementaría en campo justamente porque se reduce el costo de la operación. Hay que aumentar el volumen del capital, como fue mencionado hoy temprano. El volumen sin un volumen efectivo de capital, dependiendo de mercados, no vamos a tener el impacto que queremos tener. Y finalmente, atraer a los privados. Hay una diferencia muy grande y en esto CAF está trabajando muy fuertemente en que el grueso del financiamiento está en el sector público. Perdón, está en el sector privado, pero no revierte al verde. Entonces, hay que buscar los mecanismos para que este financiamiento del sector privado vea con mejores ojos el financiamiento verde. Entonces, esos son los puntos que me gustaría presentar.
Thank you. So, so the emphasis on bridging this relationship between public and private and communications is vital, as we've touched on, but we really didn't go into that very much earlier. So, thank you for raising that. So, we've heard on that topic, on the sort of the relationship building and communications. We've heard about the aggregation issues. We've heard about adding complexity, and TDA SAPs are already fairly complex, so that one's a little troubling, but true. We've heard about how performance indicators need to be considered up front, and also what's the old expression? You measure what matters, or what matters is you measure, and so you have to have that built in. And then the incorporation of these considerations into the TDA SAP process, which we've heard from Andrew, and we tried to emphasize. And finally, the role of regional institutions and the institutional arrangements that are, how does this alter those? So maybe in your second round, we touch on, maybe try to touch on some of those topics so we can get sort of a consensus view on some of these most important observations. Oh, also the outreach, you know, as Cecilia was mentioning, the outreach to the private sector. I found your suggestion of like, don't be afraid to go see them. You know, I think that's a really important one because just bridging that gap between public and private can be a little daunting at the start. So back to you, Vivian.
Okay. Maybe just on this one, on how we have dealt with the private sector. At the onset, we probably did not approach it very well because we were looking at formal public-private partnerships. And then obviously once we started to engage with the governments, with the finance departments, with the water departments, it became clear that it was obviously a very difficult area. The water security, as I said, it's key for Orasacom. infrastructure development, it's high on the agenda, and it has actually even been acknowledged in our SAP. So the added advantage from our project was that we developed the capacity on PPPs in the countries. So we were really focusing on the formal PPPs, but we quickly learned that there was actually scope for other mechanisms to engage with the private sector. And we also had the advantage that Orasecom has been in operation for about 20 years now. So we had results to show. For example, we undertake joint basin surveys every 5 years. And the trend is showing us that the water resource quality is declining. So when we engage with the private sector, we have something to talk about, to say, you know, through the surveys that we are doing, this is how the situation looks like. And it's threatening their businesses as well. So in that way, private sector then starts to look at, so how can we work with Orasecom to actually improve the situation? So we are currently discussing the possibility of establishing water funds as well. We are discussing how we can work together with the private sector on monitoring, improving the monitoring programs within the basin. But obviously, there is also, when we do that, we need to engage with the governments as well. Because sometimes, you know, we see each other as being on different sides of the fence. So, you know, an institution like Orasecom now has to form that bridge between the private sector and government entities. So it is something that's doable, but we just need to actively get there. The last one that I wanted to talk about was on sustainability. That I think a mistake that we sometimes do is that we start thinking about sustainability towards the end of the project. But sustainability starts obviously in the design of the project, but also at the inception phase of the project. There is one of our pilot projects that we are implementing. It took us 2 years to actually start with the implementation because we did not have the institutional mechanisms in the country. And we knew that if we start implementing, yes, it's about dealing with alien invasive species. We can do it as a project, but we knew that after 3 years, it will close at the end of the project, and that's not what we wanted to do. But to build those institutional mechanisms took us 2 years. So, yeah.
Great. Thank you for that.
Thank you, Vivian.
Paula.
This really resounds on me, and we have several examples. One thing about the private sector, she mentions that is doable. We have a really good example about that. IDB is part of the Water Funds partnership for 11 years now. And what the partnership has taught us is that the private sector can be really involved in solving local problems, real problems that we have in the biggest cities of the region, with the same objective that is improving the water security conditions. And one final point, talking about silos, I think we have also to break up sector silos, right? We mentioned about institutional silos and the need to aggregate projects. We also have to think about aggregating sectors, and Raul has presented that very well. IDB is doing a great work in nexus planning and supporting the countries for the data-driven decisions. We need to think water more as a connector and not rather as an isolated sector. So I think that we have a lot of work to do on that as well. Thank you.
Thank you. Yes, we all need water, that's for sure. Please.
Thanks very much, David. I'm going to try to hit as many of the topics that you noted through the work that's being done by the Continental Africa Water Investment Program, which is more commonly known as the AIP. So the AIP sort of consists of around 5 different programs and initiatives that are helping towards sort of driving this mobilization target that's been set out. But central to this is really the establishment around a blended finance facility. And I think this touches very much to what David and Arun presented today, where we're looking at aggregating investments both across the water value chain, but really also looking at aggregating the pool of various investors, using this blended finance model to try to de-risk the water investments that have been identified, and in turn sort of pool in additional funding and financing sources, primarily through the private sector. So we are working together with the Southern African Development Community, who are really sort of holding the pen around the incubation of the Southern African blended finance facility, which we then hope to sort of roll out across the continent through support with the African Union. And I think sort of key to this is really looking at the holistic nature around investments. So while the blended investment facility is quite central to the work that's being done around the AIP, there are 4 other various sort of programs that are then coming on board to support and drive the work around the AIP. So some of these programs sort of look towards the development of various investment programs across various levels. So this could be at the regional level, the transboundary, as well as the national level. And again, these are all initiatives that are led by the various sort of mandated institutions, be it at the regional or at the transboundary or at the national level. And it really sort of links to the identification of these investment opportunities that the SAP can then sort of help bring in and pull into the investment facility, aggregating these projects as opposed to sort of seeing them as unique and sort of individual projects, but really looking towards the value chain and building the investment case for them. The second sort of support program is really looking at the integration around climate resilience, as well as gender transformative sort of interventions that can then be used to strengthen various projects as well, to sort of look at meeting the various sort of ESG targets that a lot of these key investors are looking at. Beyond that as well, and I think quite critical to what the AIP is looking to do, is although it's an independent entity in itself, it does have the highest level of political support and commitment through the heads of states via the African Union. So I think this is really important in the means around sort of ensuring political support, but accountability. And to strengthen the areas around accountability, the AIP has also developed what we call the Water Investment Scorecard. Now, this looks at the tracking around various indicators that look at the enabling environment, sources of investment, but also this idea around the sustainability of investments as well, to ensure that decision makers really get a sense around where the key focus areas are that they need to really sort of ensure direct interventions are made at the national level. So I think this is really sort of key to the work that we're trying to do throughout the AIP, and the work done through the various sort of GEF projects within the region is really catalytic in setting up the enabling environment that can then look to help drive further investments and interests from donors as well.
Thanks. That was you did well touching on those various themes that were identified. And I think last time I heard the Africa Water Investment Program, maybe I got it wrong. I was thinking it was 30 billion. You said 50. Did I just get that wrong? It is 30. You said 50. So you upped the ambition there. All right, just checking. Okay. Please, Cecilia. They've said a lot, but maybe you can add some. Thanks.
Thank you. I want to share that last year in Dubai, CAF signed an agreement with the Green Coalition of Developed Banks for the Amazon. This is a great initiative that we are working right now, and I want to share with you this initiative. We are working with 70 developed banks in the Amazon region. We have a steering committee right now, a technical committee that work very, very hard, and a secretariat. We have an international advisor like CAF, IDB, and World Bank, and we work with 4 working groups. The group number 1 is coordinated by Banco Agrario and Finagro. And actually, they are looking for the scenario investment, the barriers to increase the finance, and they are evaluating the actual portfolio for each one of these banks. The group 2 that are coordinated by CONAFIPS and Banco Agrario also, they are mapping the framework of the sustainable finance and the taxonomies that each bank are using now. And they are working with IDB and World Bank in the guidelines for investment in the Amazon bonds. The group 3 are coordinated by Caixa Econômica Federal and BDP and COFIDE. And they are working in an innovative laboratory to design several financing products and governance model for the systemic transformation in Amazon investment. And finally, the group 4 are coordinated by BNDES and BASA, that is the Banco da Amazonia. They are working in a guideline for global finance mobilizing, and they are working in exchange trade funds and in a climate resilience and infrastructure funds for the Amazon. So this is a kind of very well working together, like a model for the coordinating with several banks and in the local banks. That can be, I think that it's a good example for this kind of relationship.
Yeah, that's fascinating. I did this green coalition of banks together with the examples that we heard from your colleagues from the other multilateral development banks show that there is a lot happening, and they're a natural partner. But I think the national development banks are also a natural partner in all of this because you're trying to move from the international to domestic over time. So that makes a lot of sense. Thanks for that information. So we have time for one last round, but it's have to be more of a lightning round. And what I'm going to do is put you on the spot. Sorry, I didn't tell you this in advance. So if you could, Andrew slipped out, so it's good. So if you could take Andrew's job for 4 to 6 weeks, and you were given sort of the green light from the Jeff CEO to make one change in terms of the way the IW is structured right now that could facilitate more attention to these subjects and make it easier going forward in the next cycles of TDA, SAP, and so forth. If you can think of one thing, doesn't have to be the most important thing, but just whatever comes to your mind first. What's the barrier you're facing, or you think they're facing, or what sort of change would you make? And then we'll start on this end, which means you get the last word there, Vivian. We'll start with you, Cecilia, just to break it up a little bit. So, what sort of advice, if you could make a change, and you had the authority to do so, and you had the backing of the Jeff Council, so what sort of change might you make?
I think that we have to think out of the box. I think that we have to try to make the better and different. Mm-hmm. So I think that we have a very, very important experience here, and I think that Jeff is a very, very important partner for this. So I think. Great,
thanks. Go ahead.
So I think the regional approach that's being considered is going to be fundamental. But to support this, I think the coordination mechanisms between the projects themselves as well would also be quite key, because a lot of the times we are looking at similar investors. So it would be great to set up a platform around investors and the various sort of project owners and project implementers to try and see how we can sort of facilitate these synergies and investment opportunities across various regions.
Good. Paula.
Thank you. Well, I would say facilitating the process, making the process a little bit faster for us, for the countries. I agree on the coordinating aspects. We need to think that TDA SAP is a well-established methodology, but how we can integrate all what we have seen today in new projects, in new ways to implement the SAPs. So I think we have now to do the work to integrate all these innovative aspects inside the well-established mechanism. Thank
Great.
you.
Thanks. And Vivian.
Yeah, no, for me, the Jeff projects need not to be as they need not have many outputs as we currently have them designed, because we find ourselves to be thinly spread and working on multiple issues, and then we don't pay enough attention to some of the key issues. For example, in our project, private sector engagement only has a budget of 100,000. You know, so we try to do so many things, and yeah.
I see a few heads nodding up in the audience. That's great. Well, thank you all. I think this is a great way to wrap up, because you were able to tie together some threads that ran through the entire day's presentations, and to put your own personal experience and perspectives on them in some very articulate ways. So thank you, and please join me in thanking our panelists.
Thank you very much. It was a true pleasure to have your contributions and to see an all-female panel. So next time, let's aim, for a real gender balance among the sessions and the contributions. Before we wrap up, and David here would be kindly wrapping up the day, and will provide some key messages that we would really like to pass on to the conference, because 200 almost of you are here, but there will be another 200 and more people being at IWC10 starting tonight. Before we do that, I would really appreciate your feedback. This workshop is not only, this is an IWLearn activity. It falls within our work plan and our activities to support the portfolio in sustainable funding and financing, in private sector engagement, etc. So we would really like to hear from you how you like this workshop, and most importantly, your recommendations. What would be the next step? Would you like to see this, turn into a series of workshops? Would you like to have online consultations, smaller meetings, more hands-on? What would be the next step for us? Thank you very much. A big thanks to all contributors, to all of our speakers and panelists on behalf of GF and our team, IWLearn. And I'm handing over to David for the last word. And as we go out, you will see your lunchbox is waiting for you, and the buses will also will start parking up right outside CAF. So once you grab your lunch, you can already head to your bus. Each bus that fills up, they will already leave to Punta del Este. Thank you very much, and see you at 6:30. We have our arrival social at the exhibition area of the conference in Punta del Este at the venue in Joy Hotel. And 7 o'clock, we have a social event. We have the film festival with beers and popcorn and some soft drinks. So please don't miss that. It's our opportunity to meet the other 200 people that were not here today. Thank you very much, all of you.
Well, I'm standing between you and your lunch and your bus trip, so I won't say very much at this point, but except to say that we've had a robust set of discussions, as well as a lot of information thrown at you. You will be getting all of these presentations, of course. I think the closing panel touched on many of the same points that I was going to raise that came to my mind that grew out of this today's discussions. That is the need to build in these kinds of considerations from the very start in the design, the need to measure, to make plans to include this within your results framework and your indicators, to reduce the overall amount of results indicators, not just to add these on, but to replace maybe, as the panel was saying, to let Jeff play its role, whether it's through IW Learn or through the various specific projects and other mechanisms for sharing, information sharing and lesson sharing, so that you don't have to repeat the mistakes or successes and everyone can learn from that. To tap into, and we'll be sending you some contact references that you can use to do more learning if you choose to, but to recognize you don't have to learn all of this yourself. You just need to become familiar enough with the topic to know what the opportunities are, and then to reach out to others who can help you build this in. Hopefully we'll not make it more complex. It'll help you graduate from having to depend on external resources, and you can build up the capacities within your own countries to carry on not only the financing, but the associated benefits of your IW activities. And with that, I'd also like to thank Constantina and the whole team that helped pull this together, including our CAF friends, Renee and others. And with that, that's the end of today's program, and I wish you all best. I wish I could join you, but I had a prior commitment at New York Climate Week, and so I'm getting on a plane tonight to go to New York, and I'll carry some of these lessons with me and the discussions we'll be having, so I'll represent your ideas and views up there. Thank you again.